On. Putin proposes Nabulina for a new term as Bank of Russia governor. The central bank meets today to review its key interest rates. And the risk of a Russian default tumbles. JP Morgan processes bond payments and sends it to Citi, but S&P cuts the nation's rating again. So it's going to be a busy day also as we take stock of exactly the week that we've had with the Fed, the BOE yesterday, and what we can look forward to over the weekend and next week. Now, for the moment, European stock futures are down a touch. DAX futures are also down some 0.2%. We're seeing a bit of a lift-off to FTSE. This is probably dragged up by the commodity-rich index, mainly because of BP, but also some of the other ones that are exposed to raw material. Now, it's pretty incredible, the week that we've had. If you look at global stocks, they've really rebounded in recent days, putting them on course for their best week since November 2020. Now, that suggests that the worst fears about higher inflation, about policy mistakes are now no longer at the forefront. And if you look at what that means for commodity stocks, we're also seeing a bit of stabilization. Now, the commodities themselves, iron ore gaining some 2%, Brent crude 108, gas oil at 1,044. And then we're hearing more and more either subsidies coming to help some of the households to weather some of the impact of this higher rising commodities, or even in France, for example, them trying to raise capital through EDF. The stock market, the FTSE gaining some 0.2%, similar gain for the IBEX, and then always look at euro and always look at some of the foreign exchange markets. We'll go to yen in a second because of some comments that we had from Governor Kuroda of the Bank of Japan, but euro dollar currently at 110.79. So let's also check out what futures over in the US are doing. Again, it's really incredible what the mood has been like this week in terms of a lot of markets also taking their stride, what Jay Powell was trying to tell them about the future progress for hikes. S&P futures down some 0.3%. And you can see when you look at yen, 118.86. The yen actually sliding to around its weakest point versus the dollar in 6 years. This is after the Bank of Japan stuck with its bullish policy stance. Now, if you look at what the, it's dovish policy stance. That's what we heard from Governor Kuroda today. Now, the LME nickel now dropping by its exchange limit for a third day, falling 12%. So this is a story of nickel. We'll look exactly at some of the fluctuations there, but there's also a problem of credibility for the London Metal Exchange. So at some point, we'll have a full roundup with Jack Farchi about what this means for some of the safeguards that the LME can put. It's been actually one of the most incredible stories in this space, certainly for the last couple of years. Yesterday, it traded for about 3 minutes before it got halted. Today, same LME, you can see down 11.9%, reaching that limit downward. So we start with the war in Ukraine. President Biden said to tell his Chinese counterpart, Xi Jinping, that the U.S. will impose costs if Beijing backs Russia. That call is due to take place later this morning. Now, Washington is also warning that President Putin may be planning to launch a chemical weapons attack on Ukraine.
We believe that Moscow may be setting the stage to use a chemical weapon and then falsely blame Ukraine to justify escalating its attacks on the Ukrainian people.
Meanwhile, sources say JP Morgan has processed funds that were earmarked for interest payments due on Russian government debt and sent the money on to Citigroup. Now, that has bondholders waiting for a second day to receive the $117 million. Joining us now is Bloomberg's distressed debt reporter, Irene Garcia Perez. Irene, you've been tracking this from the very beginning. So what's the latest on the U.S. dollar coupon payment, and what's Citibank's role in this?
So as you were saying, we know that JP Morgan, which was the correspondent bank the Russian government was referring to yesterday, has sent the money to Citibank, which is the paying agent. Now, the paying agent role is to get the money from the issuer and pass it on to bondholders. But it has to go first to clearinghouses, then custodian banks, and ultimately to bondholders. Citibank is also the paying agent for two other bonds that we understand might have been blocked. Mm-hmm. One is Eurochem, that we know has been blocked by Citibank, and the other one is Severstal, a steelmaker that said that had grounds to believe Citibank may block the payment.
So, Irene, if Russia does pay in dollars, what's next?
Well, we will be looking for the next maturities, and it has, on April 4th, it has a $2 billion due. So that will be interesting to see.
Yeah, so we'll continue, of course, monitoring the situation. Irene, thank you, Irene Garcia Perez. Now let's get into the key market drivers with Silvia Delangelo, Federated Hermes senior economist, and Bob Parker, investment committee member at Quilvest Wealth Management. Thank you both for joining us. Silvia, we've had a pretty incredible week. Global stocks actually rebounding in recent days. Does it make sense, or are we discounting higher inflation, the risk of a policy mistake from central banks, but also what households will go through?
Well, yes, very interesting week, I would say. It looks like markets have now focused more on central banks and the message from, in particular, the Fed this week. And I'd say that at this stage, they want to believe the Fed. And so they are really buying into this soft landing story for the U.S. economy, whereby the Fed will be able to address high inflation without hurting growth and the labor market too much.
Bob, do you believe, good morning, first of all, but do you believe the Fed, are they going to be able to manage this without pushing the U.S. into a recession or killing off growth?
Well, if you look at the statements from the Fed, also the Bank of England and the ECB, clearly it's very challenging because, at least in the near term, headline inflation is going to rise and is already at unacceptable levels. So challenge number one is rein in inflationary expectations. Challenge number two is don't crash the economy. And, the Fed has reduced its forecast for growth this year to 2.8%. I think the final outcome is probably going to be closer to 2%. I do think that we will see some easing up in inflation towards the end of the third quarter in Europe, the UK, and the States. But if we look at the second quarter, it's going to be a very difficult period of rising interest rates, raising in inflationary expectations, and I think, and particularly in economies like the UK, particularly weaker data.
So this is what we're looking at, Bob, and it goes back to some of the things that we're seeing. Global stocks are actually rebounding. Sylvia, when you look at that, do we need a correction? Or given all the challenges that central banks face, given all the challenges that actually the world is facing right now, what if inflation doesn't come down in the third quarter like Bob's predicting?
Well, I think that we are up for a very bumpy ride going forward. So volatility is likely to remain very elevated. We still have a lot of uncertainty, and that uncertainty was there even before the war in Ukraine. So there was still a lot of uncertainty surrounding the underlying trends for growth, inflation, the labor market, given the exceptional features of the pandemic and the ensuing recovery. And now, of course, this war in Ukraine has just amplified the stagflationary shock that central banks are facing and the very uneasy growth-inflation trade-offs.
And Bob, if you believe inflation will ease off in the third quarter, do you think we can avoid stagflation, and how do you invest?
Well, first of all, how do you define stagflation? And, if in the second half of this year, I think a central case would be, U.S. inflation easing off to 4 to 5%, Eurozone inflation easing off to sort of just below 4%. But with, U.S. and Eurozone growth, probably plus or minus 3%, in the case of the States, 2%. So, certainly there is a stagflationary trend in there. Now, coming back to your question on how do you invest, one overriding theme here is that real yields will remain negative. And, even if we get, 10-year treasuries backing up, to, let's say, 2.5% by the end of the third quarter. Bund yields backing up perhaps to 75 basis points over the same period. Fixed income investment in real terms is still going to generate negative returns. So I do think that the very high cash levels that we've seen investors accumulate in late February and early March is probably going to result in some filtering back, and arguably we're seeing this week, filtering back of capital flows into equity markets, but probably in more defensive, value-driven sectors.
That are exposed to China, Bob, or not?
Well, China, I think, is fascinating because, in contrast to the Fed and the ECB and the Bank of England tightening, I think you've got a very clear policy statement from the People's Bank of China, which is that they have eased monetary policy. They will continue to ease monetary policy. If you look at the fiscal initiatives that China is in the process of taking, whether it's increased expenditure on supporting consumption, increased infrastructure spending, they are doing everything to try and achieve their target of 5.5% growth. Now, frankly, I don't think they're going to get there, but they could get 4.5% to 5% growth at a time when the Chinese equity markets are under-owned, underloved, and technically oversold and very cheap. So I think we're going to see a catch-up effect of the Chinese markets.
Yeah, and from an economist point of view, Sylvia, are you expecting actually to have PBOC actually step in and do more after the Beijing promises this week?
So while China is clearly facing a lot of challenges, I'd say that the most pronounced challenges are like in the longer term, where China is transitioning for an emerging market model of growth to a more advanced model of growth that relies more on domestic demand. And at the same time, there have been a lot of imbalances that build up in the last decades of very elevated inflation, of very elevated growth, and of course, and in particular, the debt burden, and also some overstretching, some resources allocation that are not really balanced. And so I think that in the short term, we see some growth stabilization. Policymakers have made clear that stability is really focus for this year, going into the 20th Party Congress later in the autumn this year. And so, yes, I expect more easing, both from the monetary side of things, but more importantly from the fiscal side. That said, it's more of a, I think, more of a temporary situation. And after the Congress later this year, I think that policymakers will change their tack a bit.
All right, thank you both for joining us. Silvia Dell'Angelo, Federated Hermes senior economist, Bob Parker, investment committee member at Quilvest Wealth Management. Both stay with us. In the meantime, fresh chaos on the London Metal Exchange. The LME nickel actually dropping by the exchange limit for the third day, falling now 12%. Now, the London Metal Exchange did say it would allow these price moves up to 12% after futures plunged by the maximum allowed for a second day. But when you look at exactly what's happening now, it's once again plunged into chaos. Markets were hit by more glitches actually yesterday, delaying the open. Today we've opened on time, but it's down 12%. Coming up, central bankers had their chance this week to pull policy levers as they deal with the economic impact of the war. We'll have plenty more inflation forecasts and the inverted yield curve. That's coming up next, and this is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open, everyone. 14 minutes into the European trading day, and you can see we're trading sideways a little bit. The CAC 40 is down 0.2%. The DAX is pretty much flat. U.S. equity futures actually pretty much steady, but again, traders weighing these mixed signals in terms of diplomacy, and they're also trying to figure out what oil further above $100 a barrel means for inflation and, of course, for their portfolios. Also, nickel, I need to correct myself because I said there weren't any technical glitches. There were. Nickel actually dropping some 12% in another pretty glitchy start to trading in London. The price, of course, continues its retreat from this unprecedented short squeeze last week. Some trades, we understand, went through below the lower limit in the LME nickel market. Now, it has been a week of action for central banks. The Fed and the Bank of England hiked rates to try and contend with the economic consequences of war in Ukraine, as well as surging inflation. The OECD, meanwhile, says central banks should focus on fighting inflation, leaving government to respond to spending to counter the impact of the war in Ukraine.
Owing to the war, Europeans will, in the short term, confront higher inflation and lower economic growth. Accordingly, the challenges facing monetary policy are changing. We are unlikely to return to the same inflation dynamics that we saw before the pandemic.
This is a moment for fiscal policymakers. What we are seeing now is a hit to consumers of energy and also of food, and that needs to be addressed with fiscal measures.
We have, as a result, begun adjusting policy so that when the necessary conditions are satisfied, we can take additional steps towards policy normalization.
The horrible war in Ukraine has made one thing clear. We need to accelerate the transition towards renewable energies as much as possible.
We recommended means-targeted temporary measure to actually soothe the bill for the poorest household, the lower income and lower middle income class people.
Once a larger share of our energy demand can be met with renewables, households will benefit from lower prices.
We'll get to that in a second, but we have a new, fresh Bloomberg headline on the LME saying that trades outside the nickel limit will be canceled. Now, a lot of traders that could have made money on the other side would probably not like this. The LME announcing yesterday it would widen the limit to 12%. Remember, nickel started trading on Wednesday with a 5% limit, which was increased to 8% on Thursday. So let's see what happens on Monday. Now, we're back with Silvia Delangelo and Bob Parker. Bob, if you look at nickel, I mean, I know you also have some exposure to nickel, but does this mean that the LME is broken? And what will come out at the other end?
I think if you just retrace the price movement, obviously pre the invasion of Ukraine, nickel prices were trading around $20,000 per ton. we had this extreme volatility, largely due to this short squeeze with, the Chinese very large short position. And that short position, I think, is still, to my knowledge, still at least partly there. That extreme volatility obviously was very challenging for the LME. They had to close trading because of big issues with margin calls. In terms of sort of where we go from here, to answer your question, I think the LME is still very much an efficient working market in all commodities and metals commodities. They've got a big problem in nickel, which is a fairly narrow market, and with these very large speculative positions overhanging the market. And in my own view, is that probably if we look at the next month, nickel prices probably settle down, i.e. volatility decreases, and we probably settle down, between $30,000 and $40,000 per ton, i.e. we do not go back to the pre-invasion prices.
But does it mean, does it have implications for the London Metal Exchange? Nickel, Bob, is priced on the London Metal Exchange or in China. Does the LME go back to the dark days of 30 years ago, and what can it do to change?
I don't think it can actually do a great deal to change. Clearly the key issue is the sort of liquidity in the market, satisfactory trading, the management of margin calls. We have to recognize that, we are dealing, whether it's nickel or other metals, in fairly illiquid markets which are subject to quite serious bouts of speculation. So I think that this will settle down. If you look at the action taken by the LME over the last few days, frankly, I don't think they had any choice but to do what they have done and really try and curb trading and also protect the interests of their members.
It's just incredible. If you look at the nickel story, I know our Valerie has put some great charts today, which is pretty incredible. So the other thing is, of course, will Russia default? So every day we look at corporate bonds, sovereign bonds. Do we understand the second and third round effects if they do?
So obviously there's a clear risk of default in Russia. Now, today we got some good news from JP Morgan, who basically processed some coupon payment in dollar. And so it looks like the default risk for the moment is somewhat pushed out in the future. That said, I think that the systemic implications are quite contained, given that the financial linkages of Russia are quite limited. Of course, if it happened, that would be a shock, and possibly there would be some ramification for emerging markets, given that in some instances they are all locked in some emerging market products. But I would say that, let's say, ramifications are likely to be limited overall.
So we've had quite a week. We talked about the specter of stagflation. We talked about some of the crazy moves in nickel and otherwise. What do you think is the most symptomatic or worrying sign for an economist? Is it the inverted yield curve? Is it something else?
Well, I think that the scenario that we are facing right now is quite concerning. So we have this big shock from the war in Ukraine, resulting in higher energy prices. That's an exogenous supply shock, resulting in a deterioration of the terms of trade for countries that are net importers of energy. And that means that we'll have high inflation in the short term in an environment of already high inflation and tight labor markets across most developed markets. But down the line, this cost-push inflation could actually result in slower growth because of its impact on real incomes and aggregate spending. And so in turn, that could become disinflationary down the turn. And so we have this mismatch in the impact on inflation over time from this shock, and in an environment of tight labor markets and possibly higher inflation expectations, it's really hard for central banks and policymakers in general to really protect the recovery we are seeing. We saw before the war in Ukraine.
Okay, thank you both for joining us. Silvia D'Angelo, their Federated Hermes senior economist, and Bob Parker, investment committee member at Quilvest Wealth Management. Now, coming up, we'll have plenty more, of course, on nickel. Also, as the trading session gets underway, we take a look at some of the main market movers with our own Danny Berger. That's coming up next, and this is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 25 minutes into the European trading day, and you can see a little bit of fluctuation. U.S. equities pretty much unchanged. European equities also really unchanged. Again, if you look at what traders are trying to weigh, they're looking at mixed signals from possible diplomatic ties strengthening, or at least a breakthrough diplomatically between Russia and Ukraine. And we're also looking at the price of oil shoot up. Now, let's check in on some of the market movers with our own Danny Berger. Danny, I know we look at all of this, but actually I just want to know who's buying Chelsea. Maybe another
I want
day.
to know that too. On another day, I wish they were moving stock markets so I had a good excuse to put them up on the board. But of course, we'll talk about it when that happens. But Francine, what I am watching today is this divergence in basic resources and energy. And this has been going on for some time. Basic resources gaining. You have metals, a lot of commodities doing better on China, lending help to the economy, at least verbally. Energy, though, declining despite the fact we have the price of oil over $100. And Ted Baker, this is M&A, Sycamore Partners, says they're looking at buying them, Francine.
There you go. Ted Baker up 17%. Our Danny Berger there with the very latest market movers. Now, coming up, 3 weeks of war in Ukraine, where 3 million people have fled the country. We're live in that region next. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. it means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. High-stake talks while Presidents Biden and Xi discuss Ukraine today. The U.S. warns Russia could threaten to use nuclear weapons if the war drags on. Putin proposes Nabiullina for a new term as Bank of Russia governor. The central bank meets today to review its key interest rates. And the risk of Russian default tumbles. J.P. Morgan processes bond payments and send it on to Citi, but S&P cuts the nation's rating again. So let's look at the sectors that are moving the most. If you look at overall markets, the broad market sentiment is a little bit on the fence at the moment. Now, global stocks have rebounded in recent days, putting them on course still for their best week since November 2020. It's retail, basic resources, and technology that are on the up. Auto parts and energy are on the way down. Again, it does depend on what oil or what happens with oil. Oil extending a surge after the Kremlin cast doubt on how much progress will be ongoing in these ceasefire talks. Now, we'll have plenty more, of course, on that. And President Biden is also to tell his Chinese counterpart, Xi Jinping, that the U.S. will impose costs if Beijing backs Russia. That call is due to take place a little bit later this morning. The U.S. is concerned that China may provide military assistance to Moscow. The Kremlin and Beijing have denied those allegations.
On March 14th, the press secretary of the Russian President Peskov already denied having asked for China's military assistance.
We should make all-out efforts to support Russia and Ukraine in reaching a ceasefire.
The pressing task now is to call for maximum restraint from all parties and to ensure safety and security of all civilians.
We hope that the United States and NATO, as the culprits of the crisis, will reflect on their role in the crisis.
The fact that China has not denounced what Russia is doing in and of itself speaks volumes. And it also speaks volumes not only in Russia or in Ukraine, but around the world.
So it's been 3 weeks since the war began. 3 million Ukrainians have already fled to nearby countries. Almost 2 million more have been internally displaced. Well, joining us now is Bloomberg's Aggie Cantrell, who's at the Poland-Ukraine border. Aggie, good morning, first of all, but how is the humanitarian situation in Ukraine developing?
Yes, so Francine, we're seeing a lot more people travel not only out of Ukraine, but also to travel to other areas in Ukraine to get away from the shelling. We've heard of a lot of people trying to get away from areas like the besieged port city of Mariupol, which has had issues of being cut off from electricity and water after having now been encircled by Russian troops ever since March 2nd. And a lot of people are trying to move onwards outside of these areas that are besieged into other places in Ukraine. A lot of the refugees that I've been speaking to here in Poland originally came from parts of Ukraine that have been heavily shelled and then traveled westwards via cities like Lviv into Poland.
Aggie, what are Ukrainians telling you about their experience in leaving the country?
So there's been a stark difference, I would say, between having been here a couple of weeks ago and now. A lot of the people who are leaving now have had personal experience of the shelling. A lot of them tell me of spending days inside basements and bunkers and being fearful for their lives and their families' lives. And then when they make that decision to leave, it's quite an immediate one that they take. And then it's often a very long journey from the moment they decide to leave to when they can finally get over the border into Poland.
Aggie, thank you so much. Bloomberg's Aggie Cantrell there at the Poland-Ukrainian border. Now, let's also bring in our senior reporter for international affairs, Mark Champion. Mark, you've been writing extensively about the situation, about the possible outlines of this peace agreement. What could that look like?
Yes, well, we have, there are some things we know, and there's a great deal that we don't. So there is some kind of 15-point plan, which the Ukrainians say the Russians put together and essentially sets their demands out. But it does include a key provision, which is for Ukraine's neutrality, and it seems that there is, significant progress around that is an area where they can compromise. Then it gets hard. The Ukrainians want security guarantees from outside, and ultimately that becomes a bit like joining NATO, depending on what the guarantees are. And then secondly, the Russians want recognition by Ukraine that Crimea, which they annexed in 2014, is Russian territory, and they want recognition that the Donbas territories, the separatist territories that the Russians have supported insurgency in since 2014, that those will be independent, therefore not part of Ukraine.
So, Mark, how much actually depends on what China decides?
Well, this is really, the meeting today is, at least symbolically enormously important between President Biden and President Xi, because ultimately, the way China is the only country that has the capacity to help Russia to weather the sanctions in a way that will be acceptable, will really sort of reduce the damage to the economy, and also to refill its depleted stocks of weapons, in particular precision-guided missiles. So the U.S. is very concerned that China could make the decision to just sort of weigh in on Russia's side, and that would have vast geopolitical consequences, because the U.S. would then have to sanction China heavily in the way that it's, not as heavily as Russia, but it would have to sanction China much more heavily than it would have planned to. And the consequences that, revolve from that would be quite significant. You risk seeing a very clear division, in the world, between different countries. Europe would have to make decisions. So it's a very, it's an important moment. One the Chinese are clearly very cognizant of, because they've been very careful in trying to sort of straddle the conflict, and trying to, on the one hand, supporting Russia's position, on the other, trying to also support Ukraine.
Mark, are there any signs on the ground that Russia may relent?
None at all. They are having a great deal of trouble with their campaign. It is stuck. They're not making much progress. Around Mariupol they are, but Mariupol's really cut off, very difficult for the Ukrainians to resupply or to help. But elsewhere, there are some counterattacks by the Ukrainians. The Russians are pretty stuck. But there's no sign that they are pulling back. They are sending what reserves they can in. So they clearly have not decided to give up on this.
All right, Mark, thank you so much. Our Bloomberg senior reporter for international affairs, Mark Champion. Now, coming up, central bankers had their chance this week to pull policy levers as they deal with the economic impact of the war. We'll have a full roundup of financial conditions, of inflation, and we'll talk about the yield curve. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Well, welcome back to the Open, everyone. 40 minutes into the European trading day, and you can see we're pretty much flat. Reversal for the DAX, the CAC, and the FTSE, down between 0.3%. The FTSE actually flat. Now, it has been a week of action for central banks. The Fed and the Bank of England hike rates to try and contend with the economic consequence of war in Ukraine, as well as surging inflation. And we'll talk to that in just a second, but we're also looking at a live picture of a video coming in from Moscow, the Foreign Secretary of Russia giving an interview in English. Now, it'll be interesting to say what he says about diplomatic efforts and diplomatic talks. So we'll get to that, I think, in just a second. I don't know if we want to listen in. We may be able to, if we have sound. All right, we'll keep a very close eye on exactly what's going on in Russia, and we'll keep it in mind and come back to that also shortly. Now, joining us to discuss this, of course, the situation in Russia, what this means for fiscal policymakers, is Mayra Rodriguez-Valadares, Managing Principal at MRV Associates. Mayra, thank you so much for joining us. I know you've written extensively about what a possible Russian default would mean for other, the second round and third round effects for other companies, but also possibly other countries. Will it be contained if it happens?
Yeah, that's a great question. I mean, this is, I've seen this movie before. I was a Russian analyst in 1998, in fact, in London. And it's very, very difficult to contain those secondary effects. First of all, there's already over 100 Russian municipal, corporate, and financial institution issuers that are already at CC or C in terms of the rating, so incredibly close to default. And then you have a lot of countries that are incredibly interconnected to Russia. You've got Sri Lanka, you've got Egypt, not to mention, of course, the former Soviet Union countries. And so it's very, very difficult for there not to be some spillover effect to all of these places.
Mara, I also want to bring in our senior writer, Mark Champion, to talk about what we're just hearing from the Foreign Secretary of Russia, Mr. Lavrov, saying that the West is trying to marginalize Russia. This is the Foreign Minister Lavrov speaking in an interview. We thought it was in English, but it's actually in Russian. Mark, if you can hear me, I don't know whether this is something, because I watch Russian TV, that, this is something, and it's a narrative that we also heard before the invasion, before the sanctions. So what is Minister Lavrov talking? Is this for a domestic audience in saying, the other guys are bad and they're trying to freeze us out?
Well, it's for a domestic audience, but it's that particular message is not very different inside and outside Russia. Russia has been convinced for some time that the goal of NATO and the U.S. in particular, they don't make much distinction. They see NATO as just an arm of the U.S. That the goal has been to contain Russia, to prevent it from taking its natural historical place, which I think is the thing they don't often spell out when they're speaking abroad, but it is that is how they think about it, that the natural historical place of Russia is as a major great power, and that its physical space is not just within the borders that emerged in 1991 with the collapse of the Soviet Union, but they include areas such as Ukraine and Belarus and other parts of Kazakhstan and so on in Central Asia. So it's the former Soviet space should be in some sense part of the Russian space, and this is what that it is largely at the root of what's happening here.
If you look at some of the diplomatic things, Mark, and actually let's listen into the Minister Lavrov.
2014, when the West could not accept the free vote of Crimeans to rejoin the Russian Federation, when the West basically supported illegitimate anti-constitutional coup d'etat, when the West ignored. You know what was very interesting for me when I talked about those events to my Western colleagues? They very often use the tactic of cutting off unwanted historical period. The situation in Ukraine, they start discussing only with what they call annexation of Crimea. If you remind them that it all started with the European Union being unable to insist on the implementation of the deal which they guaranteed by the opposition, and when the opposition just has thrown away the deal signed and guaranteed by the European Union, and then the leaders of the opposition and of the so-called Maidan, the radicals like Dmitry Yarosh, was saying, we stand for Ukraine without Ruskis and Katsaps, which is Muscovites. And he publicly stated that if the Russians, well, he said the Russians in Crimea would never think Ukrainian, would never speak Ukrainian, would never...
Myra, I know it's extremely difficult to entangle, of course, the fake news and some of the things that they're trying to feed the citizens to real diplomatic efforts and overtures that maybe they're trying to do with people on the ground because the war is not going their way. But is there any instance that you think, Myra, that they have to make sure that they don't default to keep investors on side if there was a diplomatic solution? Or would that be too far-fetched? Are we reading too much into that?
No, they absolutely have to make every effort not to default on their foreign currency debt. They did default on their local currency debt back in 1998, but a default would be terrible for Russia. It already has incredibly challenging interest rate environment. Unemployment is rising precipitously because of Putin's war, and a default would increase the cost of borrowing, not only for Russia, the sovereign, but there would definitely be a spillover for all of these companies and municipalities in Russia, precisely at a time where the sanctions are really taking a hit there. You just had Canberra and Tokyo overnight also announce additional sanctions. So you have the vast amount of economic powerful countries all sanctioning Russia, and this all is Putin's war. They cannot accuse the West of bringing about problems. Unfortunately, Putin has squandered 2 decades of his leadership. The ruble really has become rubble. The economy is in shambles, and he really squandered all the metals and other commodities, oil, natural gas, riches that that country has, not to mention, of course, the incredible talent in the human resources that exist in Russia. So unfortunately, this is Putin's war.
Mark, I mean, given a lot of the misinformation that's been coming out on the Russian side, what do people in Russia believe? Are citizens behind this war?
Essentially, because Russia, the state does control the media message through television, where most Russians still get their news, they've been quite successful in presenting their version of what the war is. And we should remember that people, once their soldiers are at war, people generally want to support them, and this happens again and again and again. You look back to the Iraq War, when it was quite unpopular in the UK, for example, before the war. Once the UK became engaged, then popular opinion swung behind the soldiers and the war for quite some time. So this is happening in Russia. And the government has the capability to really limit what most people see. There's probably around 20% or so of the population that doesn't agree, that sort of understands what's going on. But it's also quite complex because there are differences between the way that all Russians look at Ukraine and the way that people outside in the West look at Ukraine.
I guess a lot will depend, Myra, also on Chinese support or not. How do you see that?
Yeah, China has a very key role to play here, and it stands to gain a lot if it's more a peacemaker. If it actually does get involved in providing any kind of trade or economic assistance to Russia, it really does risk the ire of the West. It can make things very, very complicated. Some of their companies may end up being sanctioned. And so really China doesn't have anything to gain economically from helping Russia. It definitely has the upper hand. It is the second largest country in the world when it comes to GDP. Russia's 11 and quickly falling below that. So I think that the Chinese are being incredibly bright and careful in how they maneuver this whole situation. But they certainly have the upper hand in comparison to Russia when it comes to the economy.
All right, thank you both for joining us. Myra Rodriguez Valaderas, MRV Associates Managing Principal, and Mark Champion, of course, our senior writer covering this war. Now, coming up, more on central banks' reaction to the economic impact of the war in Ukraine. We discuss all of the markets with Eddie van der Walt from our Markets Live team. That's coming up shortly, and this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 53 minutes into the European trading day, and you can see we're taking a turn for the worse with the DAX down 0.5%, a similar loss for the CAC 40, the FTSE pretty much flat. Again, a lot of these equity stocks, also U.S. equities, they're slipping today. Traders weighing these mixed signals from central banks, also from the peace talks between Russia and Ukraine that are pushing oil further above $100 a barrel. Now, to talk about the markets, joining me now is Eddie van der Walt from our Markets Live team. Eddie, well, the direction of stocks just depend on the direction of oil, and is just that all about the peace talks?
Oh, yeah, absolutely. I think the markets are very news-driven at the moment. But, it's been such a volatile week. It's not often that you get a rate hiking cycle starting and that being overshadowed by something like a big bang of policy changes and announcements in China. But we actually had that this week, so it's really exciting. Today, I think volatility probably going to be ramped up a little bit because, of course, we've got the triple witching in the U.S. exchanges, and that always adds a little bit of extra uncertainty and a lot of volume expected to go through on that.
Yeah, and Eddie, it's a very good point that you make about does it take more time this time around because of the Beijing assurances, because of the war, to understand exactly what Jay Powell is saying? So if you look at financial conditions, if you look at the inverted yield curve, does it take a couple of days for that to be processed in stocks, for example?
Yeah, you know what? I think there's a really big question at the moment. The Fed, there's two questions really for the markets in what the Fed is doing and other central banks. And the first is it enough to cure inflation? And the second is it too much so that it effectively brings down growth? So if the answers to those questions are wrong, then what we're going to see is stagflation, which is the worst possible outcome. And it's a really difficult thing to hedge in markets. And really, I think stagflation potentially being the best hedge being something like commodities or value stocks, that you can see a bid in stocks still on the back of that. But it's really hard questions for traders to answer at this point.
Yeah, and then I thought the Bank of Japan was actually quite interesting because the governor doubled down on stimulus even if inflation hit 2%. And that, goes counter-grain to what the BOE did and the Fed did.
Yeah, and if there's anybody who's seen a situation like this before, then it is Japan, right? That has struggled to get growth going over a period of decades. So Japan knows the risks in moving too soon. And I think for those reasons, I'd be really interested to see what they do going forward. So, yes, I think you're right. I think that is the central bank to watch here.
Eddie, are you ever not looking at nickel? Are you just glued to the screen to see, what happens on Monday? That limit keeps on getting increased.
I was just talking to Mark Burton, who covers these markets. I told him, you've probably got 3 years worth of copy coming out of this, right? The nickel market is so exciting. I mean, we're limit down again today, another 12%, but another glitchy start at the LME, and there's going to be a lot of unhappy people. I don't know exactly what they're going to do, but there's going to be a lot of people who are very unhappy with the exchange, unhappy with the outcomes, and I think we're still going to be talking about this well down the line.
Yeah, we certainly will. I mean, if you're making money and suddenly they cancel your exchange, you definitely wouldn't be a happy trader. Eddie, thank you so much. Eddie van der Vaalt there from our MLive team. Well, that's it for the European Market Open. Surveillance Early Edition is up next with Anna, Matt, and Kaylee. This is Bloomberg.
First step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think the Ukraine situation adds to this. It's another layer that makes it even more tricky to slam the brakes on this economy.
The situation is very volatile. It evolves by the day.
There is still a wide variety of sanctions that haven't been used. And frankly speaking, I think we've been too timid. We need to move much more quickly.
I don't think China has an interest in seeing the conflict continue.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, March 18th. Our top stories today. Russia fires a salvo of missiles targeted at areas in western Ukraine, not far from corridors used by Ukrainians trying to flee the fighting. We'll have an exclusive interview on the war and the peace talks with one of President Zelensky's top advisors. If the war drags on, Vladimir Putin may threaten to go nuclear. That is the assessment of the U.S. military intelligence experts. Meanwhile, President Biden will try to persuade Xi Jinping to pressure Russia to end the war. And the cost of insuring Russian debt against default drops and bond prices rise. Money earmarked for interest payments on Moscow's dollar debt has now been sent to Citi. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. So Kaylee, the international dimensions on war in Ukraine really taking center stage, I suppose. The role of China certainly is going to be key today.
Absolutely, as we await that conversation between Xi Jinping and President Biden. Now, speaking of China, you saw some losing of the momentum we've seen over the last 2 days in Chinese and Hong Kong equity markets. Of course, there was a lot of optimism on Wednesday and Thursday about the promises, the verbal promises Beijing made. Now the question is, will they follow that through with actual action? So a cooling of the rally in Asia. The MSCI Asia Pacific Index was essentially flat on the day. Hong Kong tech stocks in particular, what I wanted to point to, because the Hang Seng Technology Index was up 32% over Wednesday and Thursday. On this Friday, though, ending the day lower by nearly 2 percentage points, though that was well off of session lows. At one point, it was down 6%. Now, in the bond market, you're continuing to see inflationary pressures pushing up yields. That was true in Australia, where the 10-year yield rose by around 7 basis points, and at 258 or so, that is the highest going back to December of 2018. Finally, of course, we also got the BOJ decision out overnight. Kuroda not worried about inflation. He sees absolutely no reason for the BOJ to raise rates just because other central banks are. He also talked about the Japanese yen, saying it's more about dollar strength than yen weakness at this point. Once again, after that decision, the yen is weaker. Right now, trading just south of 119 to the dollar. That is the weakest level going all the way back to February of 2016.
Yeah, really interesting to watch that dollar-yen weakness. We're looking at some weakness in U.S. markets here ahead of the open. Just a little bit of risk off everywhere you look. So S&P futures down about 0.5%. That should be no surprise after the 1% plus gain we had yesterday, 2% plus on Wednesday, 2% plus on Tuesday. So we've really come back over the last few trading sessions. The 10-year yield down just a little bit as investors buy that debt to spot 1566, so at a relatively high level still. NYMEX crude, speaking of a relatively high level, and climbing 103.85 for Texas Intermediate, and Bitcoin coming off just 1/3% and still holding over $40,000 at 40,580. Anna, what are you seeing in terms of European moves?
Yeah, a little lackluster here on the European session then, Matt. We have moved to the downside on some of the major markets here in Europe. The FTSE, the CAC and the DAX all moving lower. The DAX and the CAC in particular weighed down by the auto sector, which we can roll on and show you is looking a little bit weaker in this morning's session. So some of the suppliers to the auto industry, the likes of Michelin over in France, and some of the big auto manufacturers, Renault, BMW, Mercedes, all of those trading considerably weaker today. So that is a weight on the European equity session. Matt had in WTI, I've got Brent here, 107.02. We're off highs that we touched earlier on in the session. We were up by a few percentage points earlier on during the Asian session on this oil price. And it is the strength that we've seen returning to the oil price that has got some a little jittery and reduced risk appetite, although we saw US equities make gains despite higher energy prices in yesterday's session. Talking of risk off, that's driven the euro a little lower and the dollar to the upside. We've talked about the dollar already. Here's the euro side, 110.69, down by 0.2%. To what extent does that actually help European exporters? That's very much at the margin, perhaps. But are we going to see geopolitics continue to weigh on the European currency? And will that continue to be something we trade around? And this is the nickel price. 12% is now the down limit on the LME. But another day of difficulties in trying to get these trades through. Another day of glitches, essentially. So it wasn't supposed to go down by more than 12%, but a few trades did manage to cross at lower than 12% to the downside, and so those are going to be cancelled. So another day highlighting the difficulties that the LME has had in getting this market back up and running, Kaylee. But I suppose on the upside, the fact that we are seeing these substantial moves to the downside does suggest that the short squeeze that had caused all this problem in the first place may be being unwound a little bit here.
Yeah, I guess that's the good news, Anna. The bad news is evidently the third time is not the charm for the LME. So a lot going on already today, but there is more ahead. The UK Conservative Party's two-day conference will start in Blackpool. Also for the equity market here in the US, it is triple witching day. It's the once in a quarter expiration of options and futures, along with the rebalancing and reconstitution of major indexes, so could mean a lot of volume and a lot of volatility. We'll also get the Bank of Russia's rate decision at 6:30 a.m. New York time. That will be interesting in light of this current state of the Russian economy. And finally, of course, President Biden speaking with Chinese President Xi Jinping. Biden is set to warn that the U.S. will impose costs if China backs Russia, Matt.
All right, that is going to be an interesting conversation for sure. Russian missiles have hit areas in the far west of Ukraine again, as Anna was saying. The war shows no signs of easing up, and the humanitarian situation is worsening as well. One of President Zelensky's top advisors spoke to us exclusively this morning.
The talks continue. Unfortunately, the progress is not that fast as one could have expected. And definitely, right, you are. Any talks ideally should take place in the terms of ceasefire, which is not the case currently.
Let's get more with our reporters from around the world. In Brussels, we have Maria Tadeo and Medica Poland. We have Aggie Cantrell in Washington. We have Emily Wilkins in London. We have Danny Berger. We'll start off with you, Maria, after that exclusive interview with Ihor Zovka, one of President Zelensky's top advisors. What else did he tell you?
Well, Matt, you play that clip there. He says the talks continue, but they're not going fast enough. And then he also made it clear to me that for Ukraine, this will only become a serious negotiation when the ceasefire is finally implemented. He reminded me that yesterday, of course, the city of Mariupol, remember, this connects Crimea to the Donbass, was shelled again. And this morning, Lviv was shelled in the early hours of the day. The other thing, Matt, that was very interesting from this conversation is that he told me everything that we've seen published in the international media for the past 3-4 days. This is the Russian narrative. It's not our talking points. This is what Russia wants you to believe will be in the final deal. But we do not see this as the way or the beginning of a compromise. We want to push for our own demands. And he told me when it comes to security guarantees, we do not look at Finland. We do not look at Sweden. We don't even look at Austria. We want to create our own Ukrainian model. And that means this just won't be a bilateral deal between Ukraine and Russia. We want to get the European Union, the United States, but also possibly Turkey to join in this peace deal if there is to be a peace deal in the near future in Ukraine. So making it very clear, they do not see this as a Russian-Ukrainian bilateral issue.
Yes, you've certainly been mentioning Turkey a little bit this week, Maria, and we'll keep an eye on their role. Maria Tadeo in Brussels. We'll have much more of that exclusive conversation with the Ukrainian president, Deputy Chief of Staff, later on in this hour. Let's get to Bloomberg's Aggie Cantrell, who joins us now from the Polish-Ukrainian border. We're seeing lines cross from Sergei Lavrov, the foreign minister of Russia, saying that any weapons cargo to Ukraine is, quote-unquote, fair game for Russia. This, of course, coming on the back of the intensified bombing of the west of Ukraine. We haven't seen this all that much during this campaign so far, during this war so far, have we, Aggie? But now Lviv being targeted.
Yes, so the targets that have hit Lviv this morning and had done so on Sunday last week, what's really a concern for people here is that Lviv is essentially an essential artery between the parts of Ukraine that are dealing with the bulk of the fighting and the European Union. It's very close to where I am here in Poland. A lot of the refugees who I speak to who fled the fighting in other parts of the country have gone through Lviv, have gone through that station, that main train station in Lviv to get to Poland and to other European nations. And then on the flip side, the other way, you're seeing a lot of the people here who are providing humanitarian aid to Ukraine, a lot of the trucks that are traveling into Ukraine to provide humanitarian aid to the people on the ground there, those trucks are also traveling through Lviv as this key point before they go into the conflict zone.
All right, Aggie, thanks so much for joining us. Aggie Cantrell there on the Polish-Ukrainian border. Now, taking a look at the call that we're all waiting for later on today, U.S. intelligence experts warn that Vladimir Putin is likely to make threats to use nuclear weapons. Let's get more with Emily Wilkins, Bloomberg government reporter out of Washington, D.C. Emily?
Yeah, this is a new report and intelligence that we're seeing from the Pentagon that suggests that as this invasion continues, as Russia is hit with these sanctions, as this invasion has gone on much longer than they thought it was going to, that Putin might start threatening nuclear war as a way of showing both his allies and his enemies that he is trying to still operate from a position of strength. And that is something certainly to be keeping an eye on as things go forward. Obviously, though, the big news of today is going to be that call between President Biden and President Xi, where Biden's really going to have to convince President Xi to back off and to stay away from this conflict and from assisting Russia. Well, on that point, Emily, we heard from the White House Press Secretary Jen Psaki about China's role in this conflict yesterday. Just take a listen to what she had to say.
This is an opportunity for President Biden to assess where President Xi stands. There's been, of course, rhetorical support or the absence of clear rhetoric and denunciation, or the absence of denunciation by China of what Russia is doing. The fact that China has not denounced what Russia is doing in and of itself speaks volumes. And it also speaks volumes not only in Russia and Ukraine, but around the world.
So, Emily, I guess the question is, what tangible can come from this conversation today?
Well, I think the hope is that if the U.S. is going to come in with a message to Beijing and to Xi that if they do support Russia, they will also be hit with sanctions, that it's going to be enough to make Xi sort of back off on any potential requests for either helping Russia with military aid or with trying to help Russia get around some of the sanctions, relieve some of the pain that Moscow is currently feeling on that. I mean, it's going to be a bit of a difficult dance. I mean, relationships between the U.S. and China are not particularly warm right now, but so far China's been having very careful messaging when it comes to Ukraine and Russia. They're kind of straddling the line right now. The goal for the Biden administration today is to make sure that China does not wind up supporting and aiding Moscow in their invasion of Ukraine.
Yeah, it seems some of the diplomatic correspondence that Bloomberg has seen shows that U.S. officials really lack clarity on China's true intentions. So I'm sure trying to get a handle on that will be useful. Emily, thank you so much. Emily Wilkins of Bloomberg Government in Washington. Now, there's optimism that Russia's bond payments may be settled in dollars. We've seen CDS markets responding to that. Sources say that JP Morgan has processed the funds and sent the money on to Citigroup. Bondholders, though, are still waiting to receive the $117 million. Bloomberg's Danny Berger joins us us with more. So we trace the money from Russia to JP Morgan to Citi, and then we wait for it to get to its final destination, I guess, Danny.
Exactly. Look, you know that there's stress in the system where all of a sudden the back offices are thrust into the spotlight. So JP Morgan, they're the correspondent bank. That's why Russia would have sent them the interest payment. And then Citi is the payment agent. So it goes to them, as you say, to pay eventually bond holders. Now, that's as far as we know as the money has gone. Of course, the most, if not one of the most crucial parts of bond interest payments is that it gets to the bond holders. There has been some Reuters reports that some have received payments, but again, that's not something we are able to confirm at this time. Now, despite that uncertainty, the market has taken as a positive that sanctions won't hold back from Russia paying off these bonds and paying in dollars. The cost of protecting Russian debt against a default has plummeted from its high on Monday, still elevated compared to history, but nonetheless has fallen. Of course, there's still so many questions to be answered here. Of course, this big one, will people actually get the money if they're a bondholder? And in the past, Citi has canceled corporate interest payments, according to reports. One Russian steel company going so far as saying they don't think Citi will. S&P downgrading Russia because of this plumbing issue, saying if the funds are not accessible or if a payment is made in a currency not stipulated in the terms, we believe that an investor does not agree to the alternative payment, we could deem this a default, Kaylee.
All right, so we have some answers, but still a lot of questions that we don't have answers to. Thank you so much to Bloomberg's Danny Berger. Now let's look at some stocks moving in pre-market trading here in the U.S. The first one I want to point out, GameStop, the original meme stock of 2021. It is actually plunging to the downside in early hours, down by about 6.5% after reporting a loss of $1.86 a share. Analysts were looking for a profit of 84 cents a share, so clearly a wide gap there. In other news, though, the company is launching an NFT marketplace in the second quarter, but that clearly isn't aiding optimism this morning. Another stock moving to the downside is U.S. Steel. Its forecast missed expectations. The two issues here, prices are down from the highs of last year, and demand early in the year is also not strong. So that stock is down by about 2%. One mover to the upside, though, Moderna. It has requested FDA authorization for a fourth dose or a second booster for all adults for its COVID vaccine. That goes a lot farther than Pfizer, which only asked for that fourth shot authorized for over 65. So that stock is up 1.5% before the bell, Anna.
Kaylee, coming up on the program then, more on Ukraine with Cyril Bretz, the Jacques Delors Institute lecturer, giving us his thoughts on where we head in the short term and the longer term in the war in Ukraine and the risk of a Russian default. It seems to be falling. We will discuss that with Althea Spinozzi, Saxo Bank senior fixed income strategist. If we did see a default, if it wasn't paid in the right currency, would there be spillover effects into other bond markets? Plus, his firm achieved a 76% return its first year by focusing on block trading. Now, Frank Fu is said to be caught up in a probe of Morgan Stanley. You can check out the latest in our Big Take story by typing NI Big Take on the terminal. This is Bloomberg.
Variant and the latest wave have an impact on not only consumer trends but your business, and do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida, and I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. I want to take a look at a really great chart that was put together by my friend Kriti Gupta, Bloomberg Markets correspondent. And for those of you on radio, I will just tell you it outlines financial conditions and the commodity price shocks that we've seen preceding, big dips in GDP growth, recessions. Let's get over to Kriti right now. She put this together as her chart of the day, which you can get. How do we get chart of the day? How can we subscribe to that?
You can find it on the terminal. You can tune to surveillance. You can follow me on Twitter. You can email me. There's a million ways. Send up a smoke signal. I'll catch it.
I follow her on Twitter as well. So, all right, what are we taking from this? Because we do see the oil price coming back up. Futures are down today, but we've had an incredible rally over the last few days in risk assets as the oil price came down.
Yeah, well, this is kind of a warning chart. This is a little bit bearish in some views because the idea here is that, sure, you are seeing a stock rebound, but we're looking at financial conditions, which is a different story. You do see those commodity shocks throughout history. They tend to last a while, and you see a lot of the rhetoric coming out of especially oil experts who say getting Russian supply off the market, getting this U.S. ramp up, demand isn't slowing down anytime soon. So this commodity shock, whether it's in oil, whether it's in food prices, it's likely to stick around, even though you did see oil kind of come down from that, I think, 140 level not too long ago. What's important to keep in mind, though, is that historically, commodity shocks hit those conditions far before recessions do. So as we talk about whether demand destruction is going to kind of plunge the economy into recession, consider the commodity shocks first, because it's not necessarily going to result in recession, but it could result in a little bit of tightening.
Well, and obviously the Fed wants conditions to get tighter, so in some ways the market already has done some work for the Fed. 2 days post-decision, does it look like the market believes what the Fed is trying to sell? Is it buying it?
I think it is buying it, but remember, there's a really great quote coming from Stephen Englander where he said that this is kind of dating without commitment, especially when you're talking about the Fed. And also remember, going into the first quarter of 2022, before we had any prediction of a war in Ukraine, the consensus was that you were going to see an extremely volatile first quarter, and that volatility would end the minute you got that first hike from the Federal Reserve. So in some ways, this was kind of destined to bounce back just a little bit. The question is, does it stick? And I think right now, to your point, Kaylee, people are saying, well, yeah, we do actually buy this because right now inflation is the bigger problem rather than a tighter Federal Reserve. That being said, they can very easily change their mind, and their hawkish forecast doesn't have to stay a hawkish forecast.
Right, and some people pointing to ongoing moves to the upside and break-even inflation expectations and saying maybe that means that some doubt whether the Fed can really get on top of this. We will watch. Kriti, thank you so much. Bloomberg's Kriti Gupta with the latest on markets. For more market analysis, check out MLIV Go. That is the function to use on your terminal. This is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Dr. Anthony Fauci warns that the U.S. could soon see coronavirus cases rise again, and he says vulnerable people are likely to need a fourth vaccine dose. The government's infectious diseases chief tells Bloomberg a case spike in the U.K. is likely to happen in the U.S. In China, President Xi Jinping has pledged to reduce the economic impact of his COVID fighting measures. That signals a shift in strategy that has minimized fatalities but weighed heavily on the world's second largest economy. Meanwhile, the technology hub of Shenzhen is easing its lockdown and will allow factories and public transport in the part of the city to resume operations. Coming up, we will talk about China in a different lens, its role in the Ukraine crisis. Cyril Brett, lecturer at CIASPO and researcher at Jacques Delors Institute, joins us next. This is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu ramai sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. One of the top advisors to Ukraine's President Zelensky says that peace talks with Russia are progressing slowly. Ihor Zovka tells Bloomberg that Ukraine needs hard security guarantees in any deal. He said one of those could be membership of the European Union. U.S. intelligence experts warn that Vladimir Putin is likely to make threats to use nuclear weapons if Russia's invasion of Ukraine drags on. That's part of a summary of worldwide threats from the Defense Intelligence Agency. Meanwhile, President Biden will try to persuade China's Xi Jinping to pressure Russia to end the war. The cost of insuring Russian debt against defaults dropped and bond prices rose. Bloomberg's learned that funds earmarked for interest payments on the Russian government's dollar notes were sent to the payment agents. Bondholders are, though, still waiting to receive the $117 million. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, after what has been an incredibly volatile week driven by the geopolitics, the Fed, and also policy in China, things looking a little calmer today.
Yeah, well, I mean, it's been a great week if you're long risk assets, right? Because we've had stocks just roaring back. The S&P before Tuesday was down 14%, and it is now down 7% year to date. The futures are down today, but after 3 rallies in a row, that's understandable. Investors are buying a little bit of the 10-year debt. That pushes the yield down, but still at a relatively high level of 2.1512. We also see oil coming back above $100 a barrel. TI trading for $103.69 right now. So a gain, but only 0.7%. Nothing compared to the big rally that we saw in oil yesterday. And Bitcoin is off a little bit, just about 1/3 of 1%, but still holding over 40,000 at 40,569. Kaylee, what do you see in terms of pre-market movers?
Well, what's interesting, Matt, is the loss for Bitcoin isn't all that great, but you're seeing a little bit more movement when it comes to some crypto-related equities in early hours. The likes of Marathon Digital or Riot Blockchain down 2.5% to 3% respectively, so underperforming the underlying cryptocurrency. Another stock I wanted to point to, GameStop, the original meme stock, reported earnings after the bell, and I shouldn't say earnings. Actually, it was a loss, a lot greater loss than analysts were anticipating. They were looking for an 84-cent profit. In other news, though, and this is kind of back related to cryptocurrencies and digital assets, GameStop is going to launch an NFT marketplace sometime in the second quarter. Finally, I wanted to point out FedEx. It fell about 3% in after-hours trading after its earnings. It's not yet trading in pre-market, but pay attention to it when those trades do begin, because its profit also came up short of expectations. On the one hand, volumes were subdued early in the year because of the Omicron variant, and on the other hand, rising labor costs. So that is creating quite a struggle for the company's pricing.
Yeah, we were actually watching for some read across from FedEx into postal mail delivery companies here in Europe. We didn't see too much of it, but we will watch for that, Kaylee. In terms of the European picture, just to the downside, just a touch, to Matt's point, not the volatile moves that we're seeing that we saw earlier on in the week. And of course, we've made gains over the last few days or so. So the week as a whole looking pretty positive from a stocks to the upside perspective. The auto sector is certainly a big weight on European stocks today. That sector down by 1.7%. That typically hurts the French market. It hurts the German market, where where many of those businesses are listed. The Brent crude price, just adding to what Matt said there about the sort of small scale of moves we're seeing in oil prices today, 0.7% again here on Brent crude, just as we saw on WTI. And nickel prices dropped to their limit down, 12% lower on the LME, when we saw for a third day glitches, difficulties getting trading to start once again. So we have seen that ongoing technical challenge. Some trades actually crossed below that limit down price. We understand are going to be cancelled, but it does suggest that we are seeing some of that short squeeze unwinding, the fact that we're seeing such downward pressure on nickel prices right now, Matt.
All right, we're definitely watching those nickel prices very closely. Some people really lost out on those canceled trades. We have breaking news out of the Kremlin saying that Vladimir Putin told German Chancellor Olaf Scholz that Ukraine is trying to stall talks earlier this morning. We did hear, though, that Putin says Russia will continue those talks, which I think is the most important part of that readout. Russia is going to continue those talks on Ukraine. Earlier this morning, Maria Tadeo spoke exclusively with one of President Zelensky's top advisors, Ihor Zovka.
Currently, and for the time being, as we speak, the talks continue. Unfortunately, the progress is not that fast as one could have expected. And definitely, right you are, any talks ideally should take place in the terms of ceasefire, which is not the case currently. Obviously, during the talks, Ukraine will raise the issue not only of ceasefire, but of withdrawal of troops. And the rest issues should also be discussed. So I will not reveal you all the details, and would like to pay your attention that any leaks to the foreign media, whatever, are not true. So they might be of Russian narrative. The talks are continuing, but you have to understand that the final talks should be carried out on the level of presidents.
So essentially, the real talks will only begin when there's a ceasefire in place. That's essentially what it is, right?
Absolutely. If you have the serious diplomatic talks, you immediately implement the ceasefire. Just to remind you, when they started the first round of negotiations on the level of delegations, they promised to have a ceasefire. That was not the case during first, second, third, and already fourth round of negotiations. Yes, ceasefire should be implemented immediately.
And sir, of course, there has been a lot of debate around NATO membership, EU membership. So what is the latest on this? Because the impression that some in the West now have is that Ukraine has completely given up on the NATO membership, but you want to be a member of the European Union. So just to make it very clear, if you pass on NATO membership, does it mean that you need an European Union membership? You need one if you lose the other.
We're a realistic country. We do understand the position of NATO. By the way, it was the case even before the war. NATO is not ready to accept Ukraine as a member. NATO is not helping. NATO as an institution is not helping today to fight Ukraine, for Ukraine to fight against Russian aggressor. It doesn't close the sky, etc. So being realistic, we understand that if currently this is not the case, we need the other security guarantees. One of the security guarantees is for Ukraine to become a full-fledged member of the European Union. That's why my president summoned an application for Ukraine to become a member to the European Union more than 2 weeks ago. Unfortunately, the procedures just only started. We need a swift procedure for Ukraine not to, lose its time in the bureaucratic procedures and routines. So that's why we're now hardly talking with the European Union, with the European Commission to practically process the application of Ukraine. Yes, it would be a very good guarantee for our secure future.
The other big country in this is China. I do have to ask you, do you worry about China helping Russia militarily to further strengthen their campaign in Ukraine?
I think China is a wise country and they will not do this. But yes, the role of China in this settlement is very important.
So your message is this fight is essentially between the Ukrainian and the Russian army. No one else should get involved here.
No, it's the fight against the Russian army and Ukrainian army, but Ukraine is fighting for the world. So all the world should be involved in bringing peace to Ukraine.
That was Bloomberg's Maria Tadeo speaking with Ihor Zhovka, the deputy head of the Office of the President of Ukraine. Joining us now for more is Cyril Brett, lecturer at Sciences Po and researcher at the Jacques Delors Institute. Cyril, let's first talk about the talks, because of course that headline just crossing that Putin told Olaf Scholz that Ukraine was trying to stall them. How much longer can this war go on before either Ukraine or Russia is ready to settle?
I'm afraid it will take a very long time. And we have to be very careful on that because the Russians see negotiations is not exclusive of fightings and combats. To them, from the Moscow point of view, negotiations and invasion are complementary. Military action serves the purpose of negotiators to give them the high ground to exert pressure on Ukraine in order to obtain more concessions. The way Ukraine sees it is completely different, completely at the opposite side. A ceasefire is to be the first step, and then negotiations in order to obtain what's been said by the advisor to the Ukrainian president, withdrawal of the troops, and then talks on the security guarantees.
Yes, so different preconditions to talks, perhaps, as you set out there, Cyril. Good morning to you. Let me ask you about what kind of security guarantee EU membership would bring with it. We heard there the Ukrainian official talking about how if they can't have NATO membership, they're realistic about that, but they still want to have EU membership then in that case as some sort of security guarantee. What kind of security guarantee would that add up to?
Let me be very blunt, none at all. The European Union is not a military alliance, is not an integrated military organization as NATO is. This is the biggest on the world stage. European Union is not a military, is not a strategic organization. It's dedicated to law, to business, to guarantee to the citizens. And if on the symbolic level, it would be a major step for Ukraine. It cannot be the solution to the invasion. It could have been before the invasion. It could have a kind of a leverage for deterrence on Russia, but it's no longer the case. It's too late. It's too late. What Ukraine needs is not EU membership. It's weapons. Only that.
Well, planes specifically, right? I wonder what you think about the Defense Intelligence Agency report, the U.S. Defense Intelligence Agency coming out and saying, as Vladimir Putin, as Russia has a more difficult time, gets mired down in Ukraine, as economic sanctions hit harder, Russia faces a huge depression, and this heightens the threat of Vladimir Putin using nuclear weapons.
They could not be more right. Of course, of course. And it's been the case from the outset of the invasion. Remember the press releases. Remember the press talks by President Putin. Of course, the classical, the conventional invasion of Ukraine is put under the umbrella of the nuclear threat from the outset. And at the beginning, Russia thought that Ukrainian resistance would not be that tough, and that victory was at hand. And now victory will come, probably, most probably, but at a very, very high cost for the Russians, for the Ukrainian civilians. And if Russia is put in a dead end, of course, the tactical use of nuclear weapons will be on the table in Russia. Of course.
Cyril, just quickly, in about 30 seconds, obviously, President Biden is going to speak with Xi Jinping later on today. Where do you think China will come down on this?
No. China as an owner's broker, I don't believe it. Or it will be at a very high price for the US, for the European Union, and for Russia as well, because China has never played that role on the international stage for the time being. They don't know how to do it, and I don't see their interest in it.
All right, Cyril Brett, thank you so much for joining us, lecturer at Sciences Po and researcher at the Jacques Delors Institute. We appreciate your time. Now, coming up, Althea Spinozzi, Saxo Bank senior fixed income strategist, will give us her perspective on the market implications of all of this. This is Bloomberg.
春的时候，为各国运动员和随队官员提供热情周到的服务。
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Rubles. And even if it's the same valuation, that's not what holders have signed up for.
All right, that was ING strategist Porrick Garvey speaking to me yesterday, and he hit on one of the key points that we don't yet entirely understand. We know that the funds earmarked for interest payments on the Russian government's dollar notes were sent to the payment agent. At least that's what Bloomberg is reporting. Bondholders are still waiting to receive the money, the amount, $117 million. We're not entirely clear on whether those funds were sent in rubles or in dollars. Bloomberg managing editor for credit, Dana Al-Baltaji, joins us now to talk about this. We're following it very closely. How important is this, Dana?
This is very important because we are now in a new phase with Russia. We are starting to see how it will be communicating with investors worldwide. You know, I mean, ever since the start of the war, we were always wondering to see whether or not it would honor those contracts, and it's basically saying that they want to, but we actually don't know if the rules will allow it to. So there's a lot of confusion here. We don't know if the cash has been moved or not. The bondholders are saying no. So we're still actually waiting.
So we traced the money then, Dana, from Russia to JP Morgan to Citi, and we're waiting for it to get into the sort of pipe, the networks, the clearing houses, and then get to the end recipients. Clarify if you know what currency it's been paid in. I think one colleague pointed to dollars earlier on, but we should get some clarity on that. What kind of a backdrop does this give to payments of this nature in the future? I mean, how much concern is there going to be that any of this money is going to be paid, or even if this is paid, money is going to continue to be paid in the future?
Well, that's exactly it. I mean, first, on your first question of whether or not it's dollars or rubles, the finance ministry didn't actually specify for this one if it is, but they did say earlier in the week that the process will be that they will try to pay it in dollars, and if that does not work out, then they will pay it in rubles. So the assumption is that this actual transfer is in dollars, but we don't have that for sure. Now, on the way it will be seen in the future, like let's say if this one is paid, it doesn't necessarily mean that the next payment will actually be paid.
Corporate debt could be different to sovereign debt.
Exactly. So every single payment is letting us know the sort of relationship that investors will have with Russia from now on.
Yeah, interesting to see the role that US banks want to and can play in all of this, and where exactly all of the sanctions take effect. Dana, thank you very much for joining us. Dana Al-Baltaji joining us there with the latest on the Russian debt story. Now joining us is Althea Spinozzi, Senior Fixed Income Strategist at Saxo Bank. Althea, thank you very much for your time. And I want to ask you about Russian debt, but specifically on that, if you want to weigh in on that subject, but more broadly perhaps on any kind of spillover effects that you would expect to see from non-payment of Russian debt, if that is how this ends up. We don't know yet whether this debt is entirely going to be paid, and indeed in what currency. But what kind of knock-on impact would it have to wider markets?
Well, what happens, Anna, is that right now we are hearing a lot of noises from the market, and nobody's really sure what's happening next. But really, the only certainty that we have is that the longer the sanctions are going to be imposed, the higher the possibility of the default in Russian debt, not maybe now, but in the future. And the biggest problem with that and the biggest question for investors is if there is a default, how the CDS is going to pay bondholders. Because when the CDS pays bondholders on a default, it has to auction defaulted debt. But there is no market right now for Russian bonds, and nobody can bid for them. So the big question here is how they are going to calculate the amount of money that they need to transfer to the bondholders in case Russia default.
It's concerning, Althea, because this is precisely the reason that some people buy credit default swaps, right? You're buying insurance in case of a default, and you know, if that's clearly coming, don't the sellers of credit default swaps have to get ready to pay out?
Absolutely, but that process implies the auction of the defaulted bonds, which in this case are not biddable. So the big question is how bondholders are going to receive this money, if there is going to be an outside evaluation, if these bonds are going to be valued to zero. Nobody knows that, but that's obviously a topic that is going to be tackled down the line once that we have a default. Right now, what is important is to understand whether this coupon, the one that was due on Wednesday, is going to be paid or not.
Althea, do we talk too much about this or not enough? And I guess, I mean, is this going to be, is there any systemic story here, or is this too small? Some people cast their minds back to LTCM and say, you know, that business had to be backstopped, so that had to be bailed out because of exposures that only became clear after defaults. And they think that maybe something like that could be hiding in the weeds here. Are you concerned because of spillover effects around Russia?
Definitely, there could be some spillovers, but the biggest risk is run by Russia itself, because at this point in time, a default means that Russia in the future will have serious problems to finance its debt, refinance its debt, or even access the international bond market. The big problem in our system is the banking system and how it's going to react, all those investors holding on Russian bonds, and also the issuers of CDS. However, right now we don't even have a clear picture of how that systemic it could be.
All right, Althea, thanks so much for joining us. Pleasure having you on the program. Althea Spinozzi there is a senior fixed income strategist over at Saxo Bank, talking us through this very complicated Russian default story. Now, former Goldman Sachs bond trader Dan Morehead is betting big on Bitcoin. Morehead is now the head of crypto hedge fund Pantera Capital. He discussed his outlook on crypto with me yesterday.
Within the next 5 or 10 years, almost everyone with a smartphone will use cryptocurrencies. And if that's true, they're going to be at a much higher price.
Bitcoin feels like it's been stuck at 40,000 for 6 months already. Is it going to be, you know, 400,000 in 2025?
I think it actually will be some number like that.
For more on the world of decentralized finance, you can watch our new show, Bloomberg Crypto. It airs every Tuesday at 1 p.m. New York time. We had Michael Novogratz on last week, and every Tuesday we'll have new guests on that live program, 1 p.m. time Tuesdays. This is Bloomberg.
And behind me, you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Matt, today is the deadline for bids to come in for Chelsea Football Club. So here in the UK, of course, the sanctions situation of Roman Abramovich, the owner of Chelsea Football Club, means that that has to be sold. We could see 30 bidders coming in today, Matt. So if anyone watching has a spare $4 billion and they're thinking of bidding, today is the deadline they need to be aware of.
Does do none of these oligarchs want to appeal these sanctions? I mean, I wonder on what grounds the UK just decides they'll take their property.
There was a lot of paperwork that went along with it, and certainly the UK government wants this done and dusted quickly. We'll wait to see where the bids come from. Hedge fund managers, US baseball club owners, football club owners, all could be in the mix.
All right, well, very interesting stuff. We'll continue to watch Trafford Bridge.
And other stadia are available. More Bloomberg Surveillance is ahead. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Ukraine has been a concern that has been playing into the equity market.
The situation is very volatile. It evolves by the day.
I think the market dynamics will shift a little bit as we get into the second quarter.
We're in a phase at the moment where there's a degree of optimism.
Growth is going to slow, but I tend to agree with Powell. This is not an economy that's going to go quickly into recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Lisa Abramowitz and Katie Lyons. I'm Jonathan Ferro. Futures down about 0.6%. Bramo, today is talks about talks.
This is actually going to be important talks about talks. This is Xi Jinping. This is President Biden in the United States discussing what is ahead for the relationship of China and Russia. How much does China get forced to come out publicly with their stance rather than taking a sort of more behind the scenes? We want everyone just to get along.
And Lisa, the blame game between Russia and Ukraine.
Yeah.
In these talks, the Kremlin pointing out in the last hour that Vladimir Putin, the Russian president, told Chancellor Scholz of Germany that Ukraine is trying to stall talks.
Yeah, and honestly, then you've got Ukraine saying, look, until we have a ceasefire, we can't even begin serious negotiations. So at what point can they actually realistically come together? There have been a number of people discussing off the record how, honestly, this isn't that close to a resolution. Frankly, there still is more to come, and frankly, there is a look for more leverage on both sides.
Should we try and put it all together? Put it all together this week. Katie Lyons, the biggest week of gains of the year so far on the S&P 500. That's what we're poised for.
But potentially one of the best weeks we've seen in quite some time, John. We're coming off the best 3 days for that index since November of 2020. But I think the note out of Goldman Sachs this morning that the equity market is misunderstanding the risks, the downside risks posed by this ongoing war in Ukraine and the risk to the energy supply as well, indicates that maybe this market isn't necessarily seeing things clearly at this point, John.
Slightly softer this morning. Good morning to you all. Let's whip through it. We're down about 0.6% on the S&P. On the Nasdaq 100, we're negative 0.6% also. Into the bond market, yields come in just a couple of basis points, 2.15 on a US 10-year, and crude all over the place over the last couple of weeks. Lisa, 104.23, up a little more than 1%.
Yeah, and all over the place, partly in response to what Kaylee was talking about, this feeling that perhaps we're not fully pricing in the conflict, yet if the conflict goes away, if the war in Ukraine stops, then do we get a reprieve? Do people want to just flee back into the riskiest assets because the economy otherwise is recovering? At 9 a.m., perhaps we'll get a better sense of just how close we are to a resolution. President Biden of the United States meeting with President Xi Jinping of China. How much will they discuss the potential sanctions, the potential downdraft that China could face if they do not come ahead and actually do castigate Russia, if they do basically try to take a harder stance? What will the U.S. threaten, and how much do they want China to come out formally and say to Russia, knock it off? At 10 a.m., we got February U.S. existing home sales and U.S. leading indicators. I'm curious about the housing market right now. Yesterday, we got housing starts, and I just want to put this into perspective. We saw the fastest pace of new homes being to be built going back to 2006. Just giving you a frame of reference, 2006, of course, was right ahead of what that boom and then bust was in the U.S. housing market. And today we get a slew of Fed speak, including Richmond Fed President Thomas Barkin at around 1:30, as well as Charles Evans and Michelle Bowman. That will be at around 2 p.m. How much do they discuss, frankly, the response to Fed Chair Jay Powell's press conference? Because what we saw was, frankly, we don't buy it. And I think that this is a way to show it. Basically, if you take a look at the market, if you take a look at how the balance sheet is actually at a new record high, as I looked yesterday, at $9 trillion. If you take a look at inflation expectations, they have not come down for the next 5 years. In fact, they are now at the highest level post-2002. So do they buy that the Fed is going to go aggressively enough, John, to actually bring down inflation?
Is that what we want out of the Fed speak over the next couple of days? The balance sheet conversation. Chairman Powell will speak twice in the next week, through next week as well.
Yeah, honestly, that's what I'm looking for. What guidance can they say? He said, Fed Chair Powell said that he was expecting this to be about the equivalent of one rate hike, the shrinkage of the balance sheet. So what does that mean? They're going to reduce it by, what, $500 billion? Or is it going to be more like the $2 trillion that Deutsche Bank is expecting?
Deutsche Bank, Bank of America with some big, big numbers. Lisa, thank you. Talks about talks. That's what we'll talk about this morning. We've heard from the Kremlin already. Vladimir Putin telling Chancellor Scholz that Ukraine is trying to stall those talks. Earlier on, we heard from the deputy head of the Office of the President of Ukraine. Take a listen.
The talks continue. Unfortunately, the progress is not that fast as one could have expected. And definitely, right, you are. Any talks ideally should take place in the terms of ceasefire, which is not the case currently.
Team coverage starts right now with Emily Wilkins in Washington and Maria Tadeo in Brussels. Emily, let's start with you. A conversation between President Biden and President Xi. How important is that?
Oh, it's incredibly important. I mean, we're going to see that call happen at 9 a.m. The goal here is sort of twofold. Number one, the Biden administration really wants to make sure that they are letting President Xi know that should he support Russia with either military aid, should he try and relieve Russia with sanctions, the U.S. is prepared to go ahead and put more sanctions on China, that they are willing to move quickly and decisively. Now, we don't know exactly what these sanctions are going to be yet. We haven't heard that from White House officials at this point. But that's certainly one of the messages that Biden is going to be delivering today. The other one is just trying to get a sense about exactly where China stands when it comes to how they see their relationship with Russia. I mean, at this point, we've seen very careful messaging from Beijing. They've talked about wanting to make sure there is peace in Ukraine and have a peaceful solution. At the same time, as Press Secretary Jen Psaki pointed out the other day, they haven't really come out and condemned Russia's actions at this point. So I think a part of this is going to be trying to get a sense of where China might stand and warning them that if they think they can straddle the line, that's going to be a problem if they start moving closer and closer to Putin.
Meanwhile, we have, of course, Vladimir Putin speaking with Olaf Scholz of Germany, and we're getting some headlines from that talking about how, frankly, Putin sees the blame, not that surprisingly, as with Ukraine, not Russia. Maria Tadeo, how close really are we to some sort of ceasefire, to some sort of end to what we're seeing?
You know, it's so hard to predict, but if you ask me, we're probably weeks away. This is not a situation that's going to get resolved in a matter of days. Now, when you speak to the Russians and you look at all of the info that's coming out from the Russian government, they say this is about Ukraine. The problem is they need to get real. They need a reality check. A lot of the points they're putting on the negotiating table are, quote, unrealistic. Vladimir Putin had a call with Scholz today in which he said the talks have stalled, but this is not Russia's fault. We know that he's also going to be on the phone today with the French President Emmanuel Macron. But when you speak to the Ukrainians, they always go back to the fundamentals here. And they say, how can we negotiate anything bilaterally with Russia when our cities get shelled every night? We've made it very clear we need to see a real ceasefire before we can really engage with the Russians. And you have to see it from our perspective. Russia lied about the invasion. They had an invasion that was ready to go on Ukraine. Russia continues to lie about Belarus not being involved in this. And how can we trust them in a way that is constructive, but also allows us to engage with them in a way that is honest? So if you ask me, what we see right now is the two sides, of course, are trying to prop up leverage going into what potentially could be real talks, but only down the line. This is not a situation that gets resolved in the next 48 hours.
Yeah, obviously trust a very big issue, Maria, and that is why Ukraine would like its security guaranteed in any kind of deal. You were speaking with Igor Zhovka earlier, talking about the idea of EU membership. Does being a member of the European Union guarantee Ukraine security?
And he is very close to President Zelensky, and he's someone who's been involved in diplomacy for Ukraine for a very long time. So, of course, speaking to him always gives us a very clear idea in terms of the thinking that is going on in Kyiv and the government there. What he says is, at this point, it's become very clear for Ukraine that we're not going to be a member of NATO. He also said he was disappointed at NATO, but then he also brought up the EU membership. Remember, this was something that Ukraine initiated about 2 weeks ago, and he said if we don't get one, well, for us, it makes sense that we get the other one. And under EU membership, then we would get security guarantees that could satisfy us. Because, again, they go back to the initial point. We're not going to cut a peace deal just bilaterally with Russia. We don't trust them. We want an international deal that is co-signed by a number of other countries. And for us, meaning the Ukrainians, the European Union offers the best guarantees.
Maria, thank you. Wonderful interview earlier as well. Thank you for that. Maria Tadeo and Bloomberg's Emily Wilkins. I have to say, Lisa, Secretary Blinken was pretty blunt in the last 24 hours going into this conversation. Those talks, as we've suggested, take place at 9 a.m. Eastern time between the President of the United States and the Chinese President. China will bear responsibility for any actions it takes to support Russia's aggression, and we will not hesitate to impose costs. The words of Secretary Blinken going into that.
There's so many rumors that have been flying around, and frankly, the line from the administration in the United States has been increasingly tough and increasingly hard, as they basically say perhaps there's an idea of China supplying weapons to Russia. Other people have come out and said, what's their interest in actually doing that? How much is this really motivated by China's desire to solidify its, just frankly, commodity resources, the idea that they rely so heavily on Russia for oil, for gas, and for some of the other grains?
Did you see that note that came from the director of the Defense Intelligence Agency in a summary of worldwide threats? I've seen this article after article after article with this quote. Here is the quote. As this war and its consequences slowly weaken Russian conventional strength, Russia likely will increasingly rely on its nuclear deterrent to signal the West and project strength to its internal and external audiences. Things you do not want to read, Lisa. It's something we had to read just yesterday.
And we already saw Vladimir Putin actually put his nuclear forces on alert in a way that we really haven't seen for decades. My question is, how much is the deterrent aspect the key one? Is he going to use it as a threat? Is he going to try to use this as the specter of some sort of escalation to try to, bring the temperature down? It's already working. I mean, otherwise, why are we not sending certain fighter jets over to Ukraine, right? I mean, this is a part of the whole issue.
So for market participants, Kelly, my question today would be, how much of this have we realised discounted already? Equities, as you've pointed out, on course for the biggest week of gains of the year so far. Crude down 5% this week, moving lower for a second straight week.
Yeah, I think it's across asset classes. This is a market that doesn't really know how to price this uncertainty. Yes, there's nuclear risk, but it's just broader question marks that we don't know anything about, John. And I'm not sure that any market you look at has really figured that out yet.
A morning of talks about talks. Good morning to you. Futures are down 0.5% on the S&P. On the Nasdaq 100, we're down about 0.5% as well. Yields are lower by a couple of basis points to 214.76 on 10s. Let's round that up for you and call it 215. And crude at 104.20, up by 1.2%. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden will try today to persuade Xi Jinping into ratcheting up the pressure on Moscow to end the war in Ukraine. It will be his first phone call with the Chinese president since the invasion began. U.S. officials have tried to figure out China's position on the war. Beijing has avoided public criticism of Russia's President Vladimir Putin and offered rhetorical support for Ukraine. The cost of insuring Russian debt against default dropped and bond prices rose. Bloomberg's learned that funds earmarked for those interest payments on the Russian government's dollar notes were sent to the payment agent. Bondholders are still waiting to receive the $117 million. And oil is extending those gains after the biggest daily surge in 16 months pushed prices back above $100 a barrel. Crude is still set for a second weekly loss, though. A tumultuous period of trading saw WTI swing over $9 in just 3 sessions. Moderna has asked for U.S. government approval of a second coronavirus booster for all adults. That covers significantly more people than Pfizer and BioNTech's earlier request for emergency authorization for those over 65. There's been a debate over whether repeated shots are necessary. And General Electric has slashed CEO Larry Culp's controversial pay package by $10 million a year. It's a surprise move in response to last year's rebuke by shareholders. Culp's total target compensation went from about $21 million to $11 million in a non-binding resolution. About 58% of shares voting went against the original pay deal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people.
We believe China in particular has a responsibility to use its influence with President Putin and to defend the international rules and principles that it professes to support. We're concerned that they're considering directly assisting Russia with military equipment to use in Ukraine, and it will bear responsibility for any actions it takes to support Russia's aggression, and we will not hesitate to impose costs.
A very blunt assessment from the Secretary of State, Antony Blinken, going into talks between the President of the United States, Joe Biden, and President Xi later this morning. Futures down 0.6% on the S&P. On the Nasdaq right now, down 0.6% also. Into the bond market, yields lower by a couple of basis points, 214.76. The question of yesterday, did Russia meet its obligations to pay those interest payments on Russian debt? This line just coming in, Kaylee, from the finance ministry. The Russian finance ministry says the paying agency, Citibank, the paying agent to be specific, the London branch received $117.2 million, according to an emailed statement.
Yeah, so Russia confirming essentially the Bloomberg scoop of yesterday, which was that Russia had sent that $117 million payment in dollars to JP Morgan, the correspondent bank, which then sent it on to Citi. The question is, now that we've traced the money to Citi, John, do the people who are actually owed that money get paid? That is the question that is still unanswered.
So is this a test of the pipes, Lisa? These payments can clear the pipes, so to speak.
Honestly, there's so many questions here. Who is, I mean, where all of the money? Yes, the clearing of the pipes, although the Treasury Department did say that Russia could fulfill its agreements for a while longer, even with some of the freeze. So there basically was an okay and a caveat there. However, Did they pay in rubles? Did they pay in euros? Did they pay in dollars? How much does the money actually get to the end investors? And then also, will Russia meet its following payments that are due? Because honestly, this is the first test of what will promise to be a series of nail biters.
There are more to come, and there'll be question marks over every single one. I'll catch up with Damien Sassower of Bloomberg Intelligence a little bit later. Joining us now on this snapback rally, Hugo Rogers, CIO at Dowtech Bank and Trust. Hugo, you've called it a snapback rally from oversold conditions. You expect it to continue. Why?
Well, I mean, the conditions, the oversold conditions got very stretched. You had VIX way over 30. You have cash levels at institutional investors up near 6%. You have extreme levels on bearish sentiment, both at institutional and retail investors. There's plenty of protection in the market, so the put-call ratio and so on. So there's technical reasons why a snapback rally was expected. We've seen it, and it can continue as long as those two red lines hold. The red lines being no ban of Russian hydrocarbons coming into Europe yet, and escalation that actually directly involves NATO. I know those red lines are being pushed all the time, but we expect that snapback rally to continue. But it doesn't change the fundamental outlook, which is one of volatility, the danger of whipsaw, and continuing probably downward trajectories in risk assets.
Would you say that you have a lot of conviction, Hugo?
Look, I think the thing to say is, well, you've got to channel your sort of inner Zelensky, really. You've got to hold the line. You have to bat with some conviction. You need to look to the medium term and hold that line. And that can allow you to play through what is going to continue to be a very choppy market.
Meanwhile, Hugo, what we're talking about with the meltdown or the melt-up is very specific. There are specific sectors that are getting hit harder than others. When you lean into risk, what does that mean for you?
Well, as I said, looking into that medium term, you know, we've spoken a number of times before about our conviction in the long-term undersupply in something like the oil market. So we're happy to be adding to that on weakness, like we saw in the last week. You know, there was a big decline in oil prices as people worried about Chinese consumption. People saw that maybe OPEC was going to respond and increase production to offset any losses from Russia. So we saw that correction, but here we've leaned back into that area where we have conviction in the medium term, and it also provides a decent hedge to any further escalation or that red line being crossed, that any embargo on European imports of Russian hydrocarbons.
Hugo, how do you delineate between a trustworthy and untrustworthy asset?
Yeah, I look. This we think is kind of a new paradigm. People, we're always trying to split and segregate different assets to try and understand how to play an investment. And people talk about value growth and splitting different geographies and so on. We would actually introduce trust as one of the biggest factors that one needs to consider when making asset allocations. Do you trust that you own the asset? Do you trust that your rights as a shareholder, as an owner of the asset, as a property owner, are actually going to be protected? What are the legal protections in place? And you have seen what has happened in Russia. Russian assets went from, a bond you were talking about earlier, it went from 140 back in November, $140 down to 140 cents, so 140 down to 8 cents, back up to 20. Then is it going to get paid? 48. That is not an asset to be trusted. It's to be traded, but not to be trusted, because you may own it, but you may never realize the capital, or you may never get back any capital.
So Hugo, let's take this just one step further and wrap it up there. With all that in mind, from your perspective, is China investable?
No, there you go. Short answer. I'm going to say no, you can trade it and you should, but the massive rally that we saw last week, that was triggered by a government decree that Chinese institutions had to invest in their domestic stock market. Yes, you can see the emergence of something like a Xi put. They're turning around and saying we want our capital markets to function, but is it investable in the long term? Well, what are the returns going to be? They're going to be whatever President Xi decides is the right return for you. What are the cash distributions going to be? What is the profitability of the best sector in China, which is that tech sector? Well, it's determined by what mood President Xi is in with Jack Ma. So that is not a long-term investment prospect. It is a trading prospect. There are investment opportunities, but they're short-term. If you're buying and holding in China, you need to believe that that maybe reforms that are going to be more shareholder friendly or property rights are going to improve, and we do not believe that.
Hugo Rogers, thank you, Hugo. Good to catch up, buddy, as always, of Dowtech Bank and Trust. Trust, the key issue there, Lisa, not just for Russia, for China too.
How much can you really count on investing in a country that is so dictated from the top and where that dictate changes? I mean, even with China, they actually created the lowest peg for their currency overnight in years, and basically speaking to this idea of state control over what we have understood to be more free markets in other places.
There is that view that Hugo seems to hold, that your returns will be whatever President Xi wants your returns to be. I mean, Lisa, you would say your returns will be whatever Chairman Powell decides.
I wouldn't say that.
Your returns will be.
I don't know if he has that kind of control.
Some people might say that. Futures down 0.6 on the S&P from New York. This is Bloomberg.
First step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Crypto, you have a world of young people
that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Live on TV and radio for our audience worldwide, with equity futures down about 0.6%. This is Bloomberg. We're up almost 5% coming into Friday on the S&P and facing down one of the biggest weekly gains of the year so far. Outside of that, into the bond market, 2s, 10s and 30s. Your 10-year yield shaping up as follows. On a 10-year, yields drifting higher, then lower. On a 2-year, pushing 2%. We look a little something like this on 2s, 189.48, coming in a couple of basis points. 214 on a US 10-year, down 3 basis points there. And if you look at the spread between 2s and 10s, the yield curve, so to speak, just in and around 20 still, but you can see the decline, the flatness that's come through this yield curve over the last couple of months. 24 basis points on a 2-year versus a 10-year at the moment. Just got a Russian central bank decision. Lisa, unchanged on my screen, 20%.
Honestly, what were they going to do? What are they trying to achieve? They don't have foreign investment anymore. They basically have been cut off from the entire financial system. Yeah, they're dealing with inflationary pressures that are out of control because of the appreciation of the ruble, but how as a central bank do you deal with an economy that's being made a global pariah because of the war that they are charging in Ukraine?
We often talk about the inflation target of various central banks and their ability to get back on target. The Bank of Russia, Katie Lines, we may return to the 4% CPI target in 2024.
Sounds a little optimistic, doesn't it, John? I mean, I pulled up the ruble just to see if there were any reaction. We're in and around 120. We started the year at, what, 74? This is extreme pressures on this economy. And 2 years down the road, they see that kind of normalization, I think, is really interesting. And I think the headline from the Bank of Russia, the economy is entering a restructuring phase, John. I guess that's what we're calling it.
Yeah, that's quite a restructuring that economy is going to go through the next 12 months and perhaps beyond. Lisa, they will weigh further rate changes based on the situation. Higher inflation is inevitable, but they call it temporary.
I mean, honestly, central bank independence, it's funny to talk about that really within the realm of what we're dealing with right now. I do think it's interesting, though, that the bond payment, or at least the statement from the Russian finance ministry, came in such close proximity to this rate decision. How integral is a position of maintaining bond payments, of avoiding the first default going back to 1918 on foreign currency bonds? How important is that to their restructuring that they foresee?
Obviously, the Central Bank of Russia and the challenges they face very different to the Federal Reserve. But Lisa, it's amazing that every single headline you read from a central bank right now, there are just doubts about their ability to try and achieve what they're trying to achieve. And let's talk about the Fed in that regard. They put out the forecast, they put out their assessment, we had the news conference, and then just a long list of people lined up to say, no, don't think so.
Well, and it's not just people, right? I mean, the market is basically saying that too, at least if you take a look at bonds. And frankly, you could argue even stocks. I mean, if you take a look at 5-year inflation expectations, they're the highest in data going back to 2002, despite the fact that the Fed is saying they're going to get more aggressive to fight inflation.
Drew Mattis joins us now, Chief Market Strategist at MetLife Investment Management. Drew, we've asked this question a few times post-Fed. Do you think their objectives, their outlook, is achievable?
I do, but I don't think their objective is what everyone thinks it is. They're not out there to hike rates 7 times. They're not out there to do anything but to convince people that they care about inflation. So I think they are convincing people they care about inflation. Whether or not people think they can do anything about it is a whole other matter. And quite frankly, they probably can't. But they're out there convincing people they can and trying to convince people they can. And everything that they do going forward is going to be guided by convincing people that they care about inflation.
Wait, Drew, can we sit on that for a second? You don't think that the Fed can control inflation here?
Unless they can fix the supply chains around the world and do something about energy prices, I think that, they're basically tilting at windmills right now. They need to convince people, though, that they're going to contain inflation. They're going to do what it takes. That they're basically playing off the Volcker era, right, which made the Fed famous. Probably before then, no one knew or cared what the Fed was, and now all we do is talk about it all day. They're playing off that in order to achieve a goal, which is to maintain inflation expectations at more reasonable levels than they otherwise would be.
But what's the implication of that, Drew? If they're going to be raising rates and trying to tighten the supply of money to essentially slow growth, what does that mean in terms of how the interplay with that, given the fact that they will not be able to materially bring down inflation with those moves?
Well, so that's the question then. Are they actually going to follow through on those rate hikes, or were those rate hikes put in place, the idea of those rate hikes put in place, so that they would convince people that they cared? I mean, if you get towards the second half of this year, base effects alone should tell you that inflation is starting to drift lower, right? It might not come down as fast as we would like. It might not be, my forecast might be wrong where, we're expecting, just, kind of low threes by year end. But let's say they're wrong, but they still get the direction right for where inflation's heading. They don't necessarily then need to follow through with all those rate hikes, right? I mean, we went from basically 0 to 8 rate hikes in 3 months or so. We can certainly go from 8 back down to 4 in another 3 months. And I think that's kind of what people have missed in this idea is that, the Fed uses the tools they have. Most of the tools are actually communication tools right now. And so you'll see them using the dot plot. I think it's purposeful. I think it's the only thing they can do. And so it's the only thing that they will do.
Well, and Drew, another one of those tools is its very, very large balance sheet. How do you factor in QT to this equation?
Well, so our view had been that QT is coming sooner rather than later. I actually think it'll probably be announced at the next meeting, and I think he hinted at that at the most recent press conference when he basically said it's time to do it, right? He said it's time to raise rates, so they raised it. It's time to do QT. We should all be expecting that it's coming. If it's not May, it'll be June, right? It's going to be earlier than the second half of the year when people had originally put that in place. It's the best way for them to build up a war chest in case something else goes wrong in the economy. They need to get that number lower. If they can get $1 trillion, off the balance sheet, then that's $1 trillion they can use for the next recession. And since they don't know when that next recession is, they'd rather have it now rather than later.
All right, so put that all together, Drew, feed it through to the bond market. Are we inevitably heading for inversion? I mean, obviously, we've already seen it in some parts of the curves, but 210?
Well, I think inversion's where the rubber hits the road. It's where the Fed balks and decides, you know what, we don't want to invert the curve. And so, even at the last press conference back in January, he was talking about, in the past, he was talking about where he likes 2s, 10s. We're certainly well below those levels. And I think if the market begins to behave in a way, if the yield curve looks like it's going to invert, that'll be something that actually keeps the Fed from actually going ahead and executing on the dot plot. If I'm wrong in that it's not just a signaling idea.
Well, Drew, it's inverting. The 7-year yield's above the 10-year yield. Yesterday, briefly, the 5-year was above the 10-year. It's slowly happening. So, Drew, I would ask, if it does happen, 2s out to 10s, take your pick on the yield curve, and inflation's still running north of 5%, 6%, what choice would they have?
Well, they have the choice of a high growth, high inflation environment or a low growth, high inflation environment. And I think if you're given that choice as a policymaker, you choose high growth, high inflation.
Drew Manis of MetLife Investment Management. Drew, thank you. Thank you very much. Just a range of opinions out there at the moment, Lisa. Morgan Stanley said this time we think peak rates will likely be higher inflation, stronger growth, they go on to say, should allow for a higher peak and a longer hiking cycle. There's a lot of pushback against that idea.
So Drew Manis was saying that one of the key aspects of Fed tools is communication. If what we're hearing is basically people dismissing what Fed Chair Jay Powell said is unrealistic or saying, you know what, they're going to have to allow a higher rate of inflation that they're currently projecting rather than the 2%, maybe 3%. The fact that they're gaming out what the Fed isn't telling us makes me wonder, have they lost credibility, right? Are people basically saying they don't anymore have the believability to direct policy? We know what they're going to do. They can say what they want to say.
I thought that's what this week was all about. They lost credibility last year. This was about reclaiming credibility, wasn't it?
Do you think that they succeeded? I mean, if we look at the market response to what just happened, I did not hear a dovish chair. I did not hear a dovish Powell. And yet here we have basically a market responding to what he said as they're not going to go too aggressively. And so I'm trying to square those two. And ultimately, he needs to come down to this idea that people don't believe that he will do what it takes to really counter inflation.
I agree with you. If you had me flying blind through that news conference, Kelly, and I watched that and we got to the end of it and you said, guess where the equity market is? I wouldn't have said higher.
Yeah, and I'm sure the chairman was surprised to see that too as well, John. But I would argue this is the case for not just the Fed, but other central banks as well. The BOE yesterday, as we talked about on this program, tried to dovish hike, and yet the market didn't buy that it wasn't going to have to be aggressive and continue to raise rates. The market is still pricing that in. So it seems that there's a credibility problem on both sides of the Atlantic.
Another central bank we're looking at in the last 10 minutes, the Central Bank of Russia making a decision to leave rates unchanged at 20%, offering their assessment of the economy, a restructuring that's got to take place. I think that word is a little bit diplomatic to say the least. Lisa, restructuring needs to take place in Russia. The Bank of Russia will hear from the governor a little bit later, 10 a.m. Eastern time, so several hours from now. Looking forward to hearing what she's got to say, her assessment of things at the moment. And then looking ahead to next week, we keep going back to talks about talks. Let's talk about the actual talks. Chancellor Scholz inviting G7 leaders to a meeting in Brussels Thursday. The president likely to attend all of this as well, Lisa. Things are lining up for a big week next week.
A big week, trying to create a crescendo to possibly bring this conflict to a close. Just sort of picking up on what you said about Russia and the diplomacy of those statements. They also were saying that it sees a decline in the GDP over the coming quarters, you think? It also says that businesses are reporting production and logistical difficulties. Again, you know, the diplomatic way of saying our economy has been torpedoed in 2 weeks. How much do you see Europe start to respond, and how much do you see Russia concede to the pain that they're feeling economically?
I used to sit down with the former central bank governor of Turkey, now the former central bank governor of Turkey, and I remember saying to him at the time, you probably have the hardest job in central banking. Do you think that title now belongs to the central bank governor of Russia? We sit here joking about some of these statements that she's got to make today. What a tough spot, at least, as she's in at the moment.
Especially because she probably has an audience of one. And that one is a very difficult audience to have. Futures
down 0.6% on the S&P. On the Nasdaq 100, down almost 0.7%. Looking forward to catching up with Julie Norman of UCL. We'll do that very, very shortly. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A top aide to Ukraine's President Zelensky says peace talks with the Russians are going on, but the pace is rather slow. Ihor Zovka spoke to Bloomberg's Maria Tadea.
The talks continue. Unfortunately, the progress is not that fast as one could have expected. And definitely, right, you are. Any talks ideally should take place in the terms of ceasefire, which is not the case currently.
He says a ceasefire should be implemented immediately. U.S. intelligence experts warn that Vladimir Putin is likely to make threats to use nuclear weapons if Russia's invasion of Ukraine drags on. That's part of a summary of worldwide threats from the Defense Intelligence Agency. The report says that Ukraine's continued resistance would drain Russia's conventional military strength. And in China, President Xi Jinping has pledged to reduce the economic impact of his COVID-fighting measures. That signals a shift in a strategy that has minimized fatalities but weighed heavily on the world's second-largest economy. Meanwhile, the technology hub of Shenzhen is easing its lockdown and will allow factories and public transport in part of the city to resume operations. And it was another glitchy opening for nickel trading in London today. It dropped by the maximum allowed 12% for the third day at the London Metal Exchange. The trading limits were introduced for the first time in the wake of last week's runaway price spike. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Cargo moving into Ukrainian territory, which we would believe is carrying weapons, would be a fair game. We are implementing the operation, the goal of which is to remove any threat to the Russian Federation coming from the Ukrainian soil.
The perspective of the Russian government has not changed. That was Sergei Lavrov, the foreign minister of Russia, on RT. Futures are down 0.7% on the S&P. On the Nasdaq, they're down about 0.7% also. In the bond market, a little bit of firmness there. We rally on treasuries. Yields are lower by a couple of basis points to 214.58. And as you might expect, just line after line, Lisa, here's another one. The European Parliament president banning Russia and Belarus diplomats. That line just crossing moments ago.
It has been a rapid excommunication of all things Russia. And how much does this actually push Russia into actually capitulating, ceasing fire, and beginning talks in Syria? Honestly, we have not seen that yet.
There are talks later this morning, 9 a.m. Eastern time, between the President of the United States and the President of China. These talks are important. Let's get into it with Judy Norman, co-director of the UCL Center on U.S. politics. Judy, I want to start here with a broad question, and we can get deeper and more specific about what's happening now. But we have a growing superpower with a very different interpretation of the perceived responsibility that comes with that. Have we fully realized the risks associated with that assessment?
Well, I think so, John. I mean, that has been the idea behind the Biden administration's foreign policy going into their start of this term. But they haven't been able to focus so much on China because of these other developments. Now, of course, they're forced to do that in relation to what we're seeing now in Ukraine. I think the other question, though, is to what extent China sees their role in all of this also. They have really thrived on being a rising power that's obviously mostly on the economic side. They have not, put themselves forward as a leading diplomat or leaning into things in other ways. And they're really being put in that position now to decide if they are going to really back Russia in any kind of meaningful way, if they're going to try and slow walk in this kind of neutral space that they've been trying to kind of position themselves so far, or if they're going to come out and do something more broadly. So we'll certainly hear, in this meeting between Biden and President Xi today, assuming some very strong words from Biden, following up on a meeting this past week with Jake Sullivan and his counterpart, saying that if China does in fact back Russia in economic or military ways, that they will also face costs.
Julie, how do you read some of the hardening rhetoric out of the administration? How much does this actually stem from China taking steps to support Russia, and how much does this stem from a strategic point of view, trying to pressure Russia to pressure China to pressure Russia to end the conflict?
Well, that's a big part of it for sure, Lisa. And we heard Biden use the term war criminal this week. That was initially off the cuff, but then it was pretty much reaffirmed by Biden the next day, as well as by Blinken. So that's kind of terminology that we haven't had before, makes the conflict much more personal, and in a sense kind of puts even more pressure on China by saying this isn't just a strategic arrangement you might be making, but it might be aligning yourself with someone that the whole world now sees as a pariah, as a potential war criminal, and lining yourself up with that as well. Reports have shown that Russia has asked China for different kinds of military support, ranging from drones and armored vehicles to MREs and intelligence equipment. So, the U.S. is watching that very closely. I don't think it comes as a surprise that that request has gone through. I think where the more concern is China assisting Russia in getting around these sanctions. That's really the pressure point that the U.S. and NATO allies have with Russia right now. And if China is seen as throwing a lifeline to Russia in that regard, that's where things are going to get tricky, and where the U.S. will be looking for mechanisms to try and push back on that.
Julie, how do you understand the rhetoric from both Ukrainians as well as from Russians on how the talks are going in terms of ending this?
Well, it's interesting, Lisa. I mean, obviously, we see the bombardments continuing. We hear increasingly bellicose rhetoric from Putin himself. But when we actually look at those who are involved in the negotiations, the foreign ministers, I do see some small signs of progress this week. There seem to be two main areas where the negotiations are focusing on. One is neutrality for Ukraine moving forward, and the second is in regards to territory, so recognizing certain territory as probably Russian. The first piece, there has been significant movement on. Zelensky has indicated willingness to negotiate on the neutrality piece. Russia has backed down on its calls for regime change or installing kind of a separate government in Ukraine. So that's quite positive. And it's also possible that the two parties will agree to kind of compartmentalize the territorial questions and put those into more kind of a referendum format later. So that's kind of what I see us inching towards. But again, without a ceasefire in place, it's harder to get the more important conversations moving, get tractions behind those without the actual ceasefire to allow that to happen.
Julie, just quickly, what's more dangerous? Russia aligned with China receiving support from China, or a Russia receiving support from no one, a global pariah backed into a corner and nuclear weapons at its disposal?
Well, that's one of the challenges right now, is trying to see if Russia is open to an exit ramp, or if Putin is actually trying to accelerate things even further. And this concern with Putin throughout all of this has been, how much can you push him without provoking him? And this idea of pushing him into a corner where he does feel that he has no other options is when we see a concern that he might do something more reckless, such as a chemical weapon or a tactical nuclear weapon or something like this. Again, we're not at that point yet, but that's one reason why we see this extreme caution in some regard in how we play this and how much we push him.
Julie, thank you. We're lucky to catch up with you today. It's an important day for the United States and China. Those talks several hours away. Julie Norman there of UCL. Lisa, I keep going back to this. We had 7 hours of talks reportedly between Jake Sullivan, the National Security Advisor, and his Chinese counterpart. And we have very little detail of what came out of a 7-hour conversation. My question would be, what was said, or rather what wasn't said, that has pushed the President of the United States to ultimately opt for a conversation himself.
And for, frankly, the administration to take a much harder line. I mean, I keep going back to the rhetoric, talking about the potential penalties that the U.S. will impose on China if they don't necessarily take a stronger stance supporting Ukraine or if they don't step back from Russia. To me, that's fascinating because it means that something was not said in those talks, to your point, to give them a guarantee that they are not securely on Russia's side.
Well, to your point, and to build on that, the language of Secretary Blinken, I think Katie Line speaks for itself. I'll read it again. China will bear responsibility for any actions it takes to support Russia's aggression, and we will not hesitate to impose costs. I think it's pretty clear what the administration's concern is going into these talks.
Absolutely. And the question is, how does Xi Jinping respond to that? What is he willing to risk when it comes to the potential imposition of costs on China for a war that ultimately, John, isn't theirs?
Those talks, 2 hours and 5 minutes away. Going into all of this, futures are negative 0.7% on the S&P. We keep going back to the fact that we've had a pretty decent week so far on the S&P 500 into Friday through Thursday's close. We're higher by almost 5%. We pulled back just a little bit, down 0.75% on both the Nasdaq 100 and on the S&P as well. Yields are lower by 2 or 3 basis points to 214.41, and crude is higher by a little more than 1 percentage point at 104.23. But Lisa, we are nowhere near the highs of the last couple of weeks.
I mean,
on WTI or Brent.
The massive moves, just shocking this week. What, down 10%, up 20%? I mean, it's like, again, it's trading like Bitcoin.
It's volatile. Meme stops all over the place, right? Yeah. The memification of the global equity market, the commodity market, the bond market, all of the above. Kenny Kaminsky is going to join us soon from Alpha Simplex. Looking forward to that. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Ukraine has been a concern that has been playing into the equity market.
The situation is very volatile. It evolves by the day.
I think the market dynamics will shift a little bit as we get into the second quarter.
We're in a phase at the moment where there's a degree of optimism.
Growth is going to slow, but I tend to agree with Powell. This is not an economy that's going to go quickly into recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Lisa Abramowitz and Kenny Lyons, I'm Jonathan Farrow. Futures down 0.7% on the S&P. Lisa, 2 hours away from talks between the President of the United States and China.
Yeah, I feel like this is a really important one. We've heard a lot of discussions, even with Vladimir Putin, a number of leaders, whether it's Olaf Scholz this morning or whether it's Emmanuel Macron. However, this one has some legs, given the fact that the U.S. has been hardening its rhetoric against China, and China has not taken a real stance in this war.
And Kenny Lyons, Secretary Blinken is not holding back going into this one.
Yeah, warning China that the U.S. will impose costs should it take action to back Russia, which raises the question, John, where Xi Jinping is going to come down on this with that kind of hardline threat from the United States. What is he willing to risk in order to support his friendship with the Kremlin?
Full coverage coming right up on Bloomberg TV and radio. In your equity market, we shape up as follows. Down 0.7% on the S&P, on the NASDAQ 100, down about 0.75%. Yields in 3 basis points on 10s, 213.87 after Lisa. This week, a monster move on a 2-year yield last week and again over the last few days.
Honestly, how much has this been swinging around? Again, the uncertainty of how much the Fed's going to act. And then, of course, with inflation, I keep going back to what we were just discussing. Frankly, Drew Mattis of MetLife coming out and saying the Fed doesn't really have control over inflation, so they're going to back away from rate hikes so they don't slow the economy. That's the belief. That's not what we heard from the Fed.
It's not what we heard from Jim Bullard either of the St. Louis Fed, who voted for a 50 basis point move and has just come out with a series of headlines recommending the Fed funds rise above 3%, not next year, this year. With a story, let's get to Mike McKee. Morning, Mike.
Good morning, John. Well, it's become something of a tradition for Fed officials who dissent on decisions to explain that decision. And the moment the blackout lifts and Jim Bullard is out now explaining why he voted against the 25 basis point move the Fed made on Wednesday and 450 basis points. He says the economy is stronger than people think and will remain so into 2023. And he has a rather scathing criticism of the Open Market Committee, saying that the committee's policy rate is, quote, currently far too low to prudently manage the U.S. macroeconomic situation. He goes on to say U.S. monetary policy has been unwittingly easing further because inflation has risen sharply while the policy rate has remained very low, and that pushes real yields lower. And he goes on to say the committee will have to move quickly to address this situation or risk losing credibility on its inflation target. Bullard points to 1994 when the Fed moved 50 basis points at a time and even 75 and managed to bring the economy into a soft landing. He said that should be the model. So Jim Bullard making a very strong case for another possible dissent in May if they don't go more than 25 then. We will be talking with Mr. Bullard next week and get his full thinking on this.
One thing that I'm curious, Mike, is how much dissent there was more broadly, how much division there is on the Federal Reserve, whether the exhausted and frankly didn't want to be there kind of Jay Powell that we saw this week at that press conference really reflected trying to tie together so many disparate points of view.
I think that's the case, Lisa, and I think there is a lot of division on the Fed. We'll know a lot more when we get the minutes. One of the interesting questions is, why didn't Christopher Waller dissent? He was the former research director at the St. Louis Fed, now a Fed governor, who was also very strong on the idea of going 50 basis points at this past meeting, agreed with his former boss, Jim Bullard, but then voted with the majority on the committee. Be interesting to read the minutes and see what his thinking was, if we can divine his from the rest of them. But I would imagine the Fed is just guessing at this point. They're doing their best, but they don't know exactly what's going to happen. They erred on the side of caution. We'll see if that's the case when we get to May 4th.
Mike, just quickly to your point, it would be pretty rare for a governor to dissent. You wonder if that opinion actually does show up in the minutes. Perhaps that's a platform for some more hawkish voices, so to speak, in the coming weeks.
It's been since the 1990s since we've seen a Fed governor dissent. It used to be a regular occurrence. So it is considered something unusual, and I guess Governor Waller didn't feel strongly enough to break that precedent.
Mike, thank you. Mike McKee. Jim Bullard with us on Tuesday, 8:30 Eastern Time. One you do not want to miss. Lisa, a lot of people with doubts about the Fed's ability to get to 2.8% next year. The St. Louis Fed president wanted it 3 by year end.
How much is this division over the question about the Fed's control over inflation at this point? If you don't believe that raising the rates and shrinking the balance sheet can control inflation, then they want to let the economy run hot so that they can perhaps absorb that inflation more easily.
Futures down 0.7% on the S&P. Looking forward to catching up with President Bullard next week. Team coverage starts right now on Ukraine, Russia. Bloomberg's Emily Wilkins in Washington, Maria Tadeo in Brussels. Emily, about 2 hours away from the president's conversation with the Chinese leader. What are we looking for from that conversation?
So I think we're looking for 2 things here. I mean, number one, simply as far as how President Xi responds to President Biden, noting that China runs the risk of being sanctioned by the U.S. should they be seen as helping Moscow either through military aid or through a lifting of sanctions. And then number 2, if there's any more clarity exactly about how President Xi sees his relationship with Putin and with the Kremlin at this point. I mean, they have been very, very careful about their messaging at this point. They've been very careful about what they've said in regards to Ukraine, in regards to Russia. An official described this as sort of a pro-Russia neutrality, where they have said things about wanting to have peace in Ukraine, about not invading Ukraine, but at the same point, they really have not condemned Russia for the invasion.
Maria, have we heard anything from the Europeans in regard to China? Because obviously Europe is economically dependent on Russia when it comes to energy supply, but they're economically dependent on China as well.
Look, it's a very good question because we haven't really heard from them directly speaking about China. The concern that they have is the same that the U.S. delegations and the U.S. government would have. One is, of course, that China is going to prop up the military operation of the Russian Federation. And then 2, of course, that China could help Russia circumvent some of the sanctions that the European Union has put in place. Behind the scenes, I have heard from a number of officials repeatedly say that any country that helps Russia will have to pay a penalty, but they haven't really referred to China by name. The other big point here, of course, is that this is happening at a time in which the European Union's relation with China has become very icy. It's very frosty. Ever since Angela Merkel left office and we have a new German government, the trade deals also have been called into question. As you know very well, there is now on the table the EU-China trade deal, which has been frozen and for many is now completely dead. So they will want to hear from China in terms of the diplomatic effort and then 2, the sanctions. But when it comes to China playing a moderator here, bringing the 2 sides, for many Europeans, that's not the role that China is going to play here.
Maria, what's the latest on Germany, given the fact that they are incredibly dependent on the gas from Russia, and there's been a lot of pressure to try to reduce that dependency much more quickly than they're willing to do so? What's the latest on any progress on that front?
Well, what we know is that, of course, the Nord Stream 2 pipeline, that is dead. It's politically dead. To bring back from the death is going to take a miracle. That's what one official told me. Certainly not with Putin in government. We're not going to see the day of light when it comes to Nord Stream 2. But, of course, there are other pipelines that are working, particularly the Nord Stream 1, that is Russian gas that is feeding through every day into Germany. Now, what the Germans have said is that at this point, it is unrealistic to say that Germany could or can afford a full embargo on Russian energy. So every person that I've asked behind the scenes, but also on the record, are we going to see an imminent ban the way that the United States did? I always get the same answer, and it's no. The Germans do not want it. They fear about the repercussions that this could have on the German economy. And just very briefly, you can also sense sanctions fatigue from a number of countries that believe they have done a lot already for Ukraine, and they want to see the full impact of this before they go into the next stage.
So, Maria, let's talk about the next round of talks. We're setting ourselves up for a massive week of talks next week with G7 leaders. The President of the United States will be attending to them, as we've reported through much of this week. What are the deliverables for those conversations? Are they just going to meet up, talk, and not deliver anything? What can they do next week?
Look, I don't want to be pessimistic, but that would be my impression. When you look at the Ukrainians and the Russians, they still say this is a conversation that we need to have ourselves, the Ukrainians and the Russians. This is almost an existential question for the two countries. How can the two coexist, if anything, at this point? For President Biden to come here, in many ways, this is just a show of support. He wants to show particularly the eastern members of NATO, Poland, Latvia, Estonia, Lithuania, Romania, that the United States will protect them if there is a spillover effect from this war. But when it comes to the Ukraine war and the Ukraine situation, it is becoming very clear that for the Ukrainians, it will only be solved if Vladimir Putin and Zelensky sit down and work out a peace deal. When that's going to happen, my guess is as good as any, but my impression is that we're heading for a conflict that's going to last weeks, not just days.
Maria, thank you. Maria Tadeo out of Brussels, Emily Wilkins down in D.C. Then we've all been distracted by this line from President Bullard in the last couple of minutes. Lisa, I was just working through the statement that he's just put out moments ago after dissenting on Wednesday to a decision to hike by 25 basis points. He wanted a 50 basis point move. He said the following as well. In this piece, in addition, I recommended that the committee try to achieve a level of the policy rate above 3% this year. This year, 2022, not 23, this year, above 3%.
How much is this the division between the Fed officials that see the Fed as having some control over inflation and those that don't, that still believe in the transitory kind of discussion and things that are out of their control? And if that's the case, how willing are a lot of the participants to allow inflation to run incredibly hot, at least the short term, in order not to sacrifice growth?
This is why news conferences are so difficult for any leader of a central bank, because you have to try and reflect the consensus. Next week, we hear from the chairman a couple of times, and I think we want the chairman's opinion, Chair Powell's opinion, on what he thinks about the situation. And you'd imagine, Lisa, that carries more weight than the St. Louis Fed president who dissented earlier this week.
And I would gather that he has a more dovish take, and that is probably reflected in the lack of conviction people are seeing in markets that he's going to go through with this.
You'll hear from Chairman Powell a little bit later next week. Futures down 0.8% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden will try today to persuade Xi Jinping into ratcheting up pressure on Moscow to end the war in Ukraine. It will be his first phone call with the Chinese president since the invasion began. U.S. officials have tried to figure out China's position on the war. Beijing has avoided public criticism of Russia's President Vladimir Putin and offered rhetorical support for Ukraine. Russia's finance ministry said that those coupon payments on $2 bonds are now with Citibank. That means it has fulfilled its obligations to investors. The statement confirms earlier reports that $117 million had been sent to Citi, which is the payment agent. Still, S&P sees the risk of non-payment either now or in the future, and it cut Russia's ratings once again. Oil is extending gains after the biggest daily surge in 16 months pushed prices back above that $100 a barrel threshold. Crude is still set for a second weekly loss. A tumultuous period of trading saw WTI swing over $9 in just 3 sessions. And General Electric has slashed CEO Larry Culp's controversial pay package by $10 million a year. It's a surprise move in response to last year's rebuke by shareholders. Culp's total target compensation went from about $21 million to $11 million. In a non-binding resolution, about 58% of shares voting went against the original pay deal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This chip shortage is going to last longer than many people believe, likely straight through this year, and I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people.
We believe that Moscow may be setting the stage to use a chemical weapon and then falsely blame Ukraine to justify escalating its attacks on the Ukrainian people.
Secretary Blinken not holding back. This is going into talks with China as well. The US and China, the President, Joe Biden, speaking to President Xi over the phone in about 1 hour and 40 minutes time. Going into all of that, futures are negative by 0.75% on the S&P, on the NASDAQ too, down about 0.7%. Yields in 4 basis points to 213.34. Katie Lyons, what to do with fiscal policy? Chancellor Sunak in the UK saying my priority going forward is to cut taxes.
Yeah. Obviously, the UK faced with a certain cost of living crisis that it risks being exacerbated by the conflict in Ukraine, the resulting sanctions on Russia. What's interesting is to contrast Rishi Sunak, who of course will speak again later on next week, John, with what we heard from the Bank of England, who seems to be a little more concerned about growth, maybe not prioritizing inflation so much. And I wonder how the dance goes between the monetary policy and the fiscal policy.
And let's keep it on monetary policy. Moments ago, the Fed President, Jim Bullard, put out a statement online on the St. Louis Fed website after dissenting to this week's decision. They voted for 25, he wanted 50. He went on to say, I recommend that the committee try to achieve a level of the policy rate above 3% this year. Katie Kaminsky joins us now, Chief Research Strategist at Alpha Simplex. Katie, 3% this year, can we just work through that? What would happen if they tried to raise the Fed funds to 3% this year?
Oh, that's a hard one, because the truth is I would love to do that and raise the Fed funds rate to 3%, but that has repercussions and it needs a little bit of balance in terms of not affecting growth and causing disruption in the markets. So I think the Fed is probably choosing to be a little bit more conservative and kind of ease into this new decision and how to actually move into a regime of raising rates. So I think there's a difference between what might one might want and what is actually achievable in sort of short order.
Achievable without the disruptions that you talk about. Is this basically the modern form, the new form of a Fed put, that they will move much more slowly than perhaps they would want to, simply because they do not want to incur huge losses in the equity markets?
Yes, because I think the challenge is, remember, as rates rise, we have sort of industries that have more duration exposure. We have potential tightening of credit. We have other issues that could cause businesses to be a little more squeezed with higher rates. And so I think the challenge is balancing between not affecting growth and encouraging good economic practice, but at the same time, not disrupting the market. I mean, traditionally, whenever the market has been faced with a rate hike, we usually have sort of a sell-off in some way. So I was pretty impressed that the market was relatively calm this week about this decision, but maybe that's because everybody knew it was coming.
Well, impressed though, at the same time, Katie, we did see a change tone from Fed Chair Jay Powell, even indicating balance sheet reduction as soon as May. I'm just wondering, are we actually reacting to the words? Are we actually reacting to the press conference? Or are we reacting to the Fed that we have known over the past 10 years, which is one that is beholden to a certain calm in markets?
Yeah, I mean, that's a good question. I mean, I think we've been asking the same question all last year. Are we ever going to see this type of move? On our side, what we do see is sort of the technical signals that show that rising rates are coming, and sort of the trend themselves really sort of has been indicative that we're going to see these rising rates in the long term. I think the real challenge is them sort of shifting regimes and sort of being more actionable. And I think that's something that we really still have to see. And I think you indicated that in the sense that we've kind of seen them being a little bit more complacent in this area. But I think when you're dealing with inflation at the level we're seeing right now, the pressure is going to come from a lot more places, and that will push them more.
Katie, the markets knew coming into this year about those inflationary pressures and the likelihood of tighter monetary policy resulting from that. What it couldn't have anticipated was a war in Eastern Europe. Do you think the market is still underpricing the risks around both of those things happening simultaneously as we see the S&P 500 coming off its best 3 days since November of 2020?
That's a good question, because I think most people are asking themselves this right now. But the truth is, from our cross-asset perspective, we've really seen that some of the trends going into the Ukraine crisis really just extended. So what that means is we saw an extension of current themes, inflation theme actually extending even further, and we had massive moves, particularly in the energy markets. So some of us are thinking that there may be some consolidation at this point, meaning that some of the concern and some of the supply chain issues are priced in. But there is still definitely room, because as you know, geopolitical uncertainty is very difficult to predict. And things can change quickly and in different directions than we would like. So what I would say is we may not be pricing it all in, but that may be just because it's hard to know how to do that.
Katie, just quickly, just finally on the Fed, if we can finish there. Lisa and I were talking about this with Tom earlier this week. This felt like the December Fed meeting, where Chairman Powell said everything he needed to say in the news conference and people didn't really listen to it, and then they reacted to it when the same thing came out in the minutes, as if the minutes were some kind of hawkish surprise. Do you think we're setting up for the same kind of thing again?
Oh, yeah. I mean, to be honest with you, I wish I knew the answer to that question. I think most people are really sort of in a period where they're not reacting much right now. I feel like the market has moved already. And the key question is, does the market already anticipate that? And so I'd say that we're seeing some consolidation, some of the positioning kind of coming off for certain trades.
Interesting.
Which suggests that people, so you saw that flattener kind of turn into a steepener a little bit this week, which means that people had betted on this move, or a bet on this move, and now they saw it, so there's a little consolidation. What I'd say is short term, respite, a little bit of back and forth, and then more focus on the next time we have an opportunity for a hike.
Kelly, thank you. Kelly Kaminsky of Alpha Simplex. This is a difficult time. I'll talk to Peter Cheer a little bit later of Academy Securities. He's stressing the wide range of outcomes the massively wide range of outcomes we still have on either side of this debate. The guests always put it better than I can, Lisa. This was Aaron Canada Clear Harbor. He sent me a message earlier this week. He said the dilemma for many investors at the moment, allocate capital towards the inflation story or allocate capital to the increasing likelihood of lower growth and higher unemployment.
Well, that really comes down to the Fed's willingness to slow growth, to hike rates in order to try to bring down inflation. And honestly, I keep going back to Drew Mattis's point, whether they even have control over that at this point.
It's a guessing game, isn't it? Isn't that all it is?
That's all it is.
I mean, it always is. But this time around, they put out these forecasts, the dot plot, and people are saying, yeah, they've done that now, which means they might not have to do it because people will start to tighten financial conditions and then they can back away.
We don't understand inflation. We haven't understood inflation for years. The Fed had got inflation wrong, and now we're scratching our heads trying to understand the next leg of this path.
That's the Bramo I know and love. Futures down 0.75 to 1% on the S&P. It took a while, Kaylee, about 90 minutes.
It's reciprocated.
This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
A really important morning of talks, 4 talks around the conversation in Ukraine and Russia's invasion of it, China and the United States. The President, Joe Biden, speaking to President Xi at 9 a.m. Eastern Time. That is about an hour and 30 minutes away. Looking forward to the coverage of that a little bit later. Going into it, this week so far, big week of gains on the S&P 500. Through Thursday's close, up almost 5 percentage points. It would be the biggest weekly gain of the year so far, but we pull back now, soft and negative by 0.75% on the S&P. On the Nasdaq, down, let's call it 0.8%. That's the equity picture. Here's the bond market story. 2s, 10s and 30s. On the week, 2-year yields up about 15 basis points or so. Lisa, this week we came very close to 2% on 2s. Just about beneath that level, about 199 or so at the highs on Wednesday, and then we backed away. Then we've heard from the St. Louis Fed President, Jim Bullard. Put his hand up for 50 basis points this week, did not get it, dissented. Now he's put out a statement saying that he would like to see the Fed funds get to 3% this year. Can Jim Bullard find some friends by the time we get to early May and this Fed sits around the table together again?
They've moved a lot already. I think that we can't underestimate how much they've already shifted, talking about a 2.8% Fed funds rate in the very near future. That alone is a huge move. However, it seems like the leadership does not agree with this. The leadership seems to have more hesitance than the rest, which makes me wonder how much traction he can get.
Chairman Powell coming up next week. We'll hear from him a couple of times, not once, but twice, I believe. That's the Fed. This is the BOJ. Katie Lines, the ECB thinking about making a move. The Fed has made a move. The Bank of England made another move. Governor Kuroda wants no part of it.
Yeah, the message from the BOJ, John, is if all of your other central bank friends are jumping off the hiking bridge, you don't have to go too. Kuroda saying he sees absolutely no reason to raise rates, even as CPI could reach 2% in April. And the commentary on the yen, John, also really interesting. He said sometimes it can be a positive if the yen is weaker for fundamental reasons, but he said it's more about dollar strength at this point than yen weakness.
Dollar yen just about through 119 this morning. That's the cross-asset price action. Let's get some single names and say good morning to Romain. Good morning, Romain.
Hey, good morning, John. Keeping an eye on the rally that we've had over the past 4 days here. The idea is whether that's going to continue here on this Friday and into next week. We should point out that at least on a weekly basis, all but 4 of the stocks in the NASDAQ 100 are higher on the week, and all but about 40 of the stocks in the S&P 500 also headed towards weekly gains. But a lot of the names that sort of led us to where we are today, they're softer here in the pre-market. That includes Apple, down about 0.6%. A lot of the big cap tech stocks basically kind of either flat to slightly lower here in the pre-market, as a lot of people still have their eyes on Ukraine. And of course, this conference call that you talked about between Xi Jinping and President Biden in just a couple hours' time. FedEx not doing any favors for this market as well. They came out with earnings last night, and they missed pretty big here. And the biggest issue was labor costs, and not just the cost to hire people, but the idea that they had a lot of shortages of labor at certain hubs, and those distribution hubs had to reroute packages elsewhere, and that raised expenses for the company. That weighed on the company's earnings. Those shares down about 3.6%. We should also point out FedEx kind of blamed some of this on Omicron, but a lot of the analysts out there are saying there are other bigger issues here, including the price hikes that FedEx implemented, and that actually led to lower package volume as well. One of the bright spots, at least on the day here, slightly, Moderna up about 0.6% on the back of that news that it's going to file with the FDA for a second booster shot for adults. Flip it up and keep it going here. We keep an eye on some of the other names out there. Pushing forward to next week, you really want to keep an eye on a lot of these names that have high international exposure. Nike is going to report earnings on Monday. Rather dour here. At least 6 analysts on the sell side in the past 48 hours alone have lowered their expectations for those earnings, cut their price targets. The shares down about 0.7%. Remember, China's sales in the most recent quarter were down 20%, and the expectation here is that the growth that we have been seeing in North America, that's going to be disrupted by some of those supply chain issues. So combine that with another bad quarter in China, and expectations are moving to the downside. Stellantis lower here, down about 4%. That was back on some industry-wide auto data out of Europe, and an interesting note out by Goldman Sachs about how some of those auto stocks that have high European exposure could be in for a correction. And one of the big bright spots here in the pre-market, at least here on the U.S. side, is StoneCo. This is the Brazilian-based fintech company backed by Warren Buffett. They reported profit. Expectations for that profit were low. They came in well above those expectations. The shares here in the U.S. up 28%, John. In the
I'm not used to Stellantis, Romain.
Yeah. Chrysler,
you got used to that?
Jeep. No. I mean, every time I see Stellantis, I have to say, what is that again? But
it's like Meta.
Yeah.
But worse. At least I know what Meta is. It's meant to be Facebook. Stellantis, I scratch my head, search the Bloomberg, and I'm like, oh yeah, it's Chrysler and Fiat and Jeep and all of the above. Romain, thank you. Looking forward to the close a little bit later coming up on Bloomberg TV and radio. That data that Remain pointed to on EU car sales, Lisa, yesterday dropping 6.7% to a record low for February.
Right now, we are dealing with supply chain disruptions that have only gotten worse. And we're dealing with now both that kind of supply chain shock, in addition to the extra costs that people are feeling, so they cannot absorb them, perhaps, as easily as maybe even here in the United States.
That's what I was going to say. We're going to start to conflate some of this data with a weaker consumer argument for the Europeans. Does the same thing happen stateside in the coming weeks and months as well? We've been talking about softer consumer confidence, Kaylee, in America now for a while. Decade lows on UMich.
Yeah, especially on UMich. The conference board metrics have come in a little stronger, but there still has been this great divide, John, between consumer confidence and the indications there and a consumer that's still showing up in spending, in the spending data. It doesn't yet seem that all the inflation fear is out there is actually ultimately affecting behavior all that much.
Joining us now on the path forward, Tom Titsouris, head of fixed income research at Strategas, a Baird company. Tom, you think the Federal Reserve has already made a policy mistake in the last 12 months. You think they're about to make another one. Walk us through it.
Yeah, absolutely. And there were some comments by for Fed President Bullard there talking about how he wished the Fed had implemented balance sheet reduction already. I would absolutely agree with that. We think it was a policy mistake to not begin tapering last May. That is waiting until November to taper. We think it's a policy mistake to delay balance sheet reduction any further at this point in time.
So right now, what are you betting on in terms of yield curve inversion, in terms of how this plays out in bonds?
Yeah, as we speak right now, if the Fed were to follow the path that it seems to be on at this point in time, that is 7 rate hikes this year, seemingly 3 or 4 next year, then very likely they're going to invert the curve on a 2s-10s basis by the end of April at the latest, and quite possibly invert the curve between Fed funds and 2s by the end of this year. And let's be very clear, we have a very unique view at Strategas. Inverted curves are not just leading indicators of recessions, they're causative factors of those recessions. And what's more, they tend to worsen wealth inequality on the other side of those recessions. So we take curve inversions very seriously, and we think the Fed should as well.
So when Chairman Powell this week said that the probability of a recession in the next year is not particularly elevated, Tom, would you disagree with that?
At this point in time today, no. If the Fed implements its rate hike path, then it becomes almost a guarantee that we're going to have a recession by early next year. I don't think we can handle a 2% Fed funds rate right now by the end of this year. I really don't think we can handle that at this point in time.
Tom, if we invert Fed funds 2s by year end, surely the rest of the market's pricing a recession. And I just wonder what that means in a credit market, how you expect that to evolve alongside your call on the Treasury curve.
Yeah, well, once you start to invert Fed funds 2s, it pretty much tells you you're in the recession at that point in time. So we would expect broad credit market indicators to be widening out, not just the weaker names. But at this point, I'd say a 2s-10s inversion, on the other hand, that tends to be the point where the market starts to pull credit from the cash burners. By a Fed funds 2s inversion, the market's pulling credit pretty much from everybody except from the U.S. Treasury, and that's when you get a broad credit weakness. At that point in time, I think both equity and credit markets would be off quite a substantial amount once Fed funds and 2s invert.
I sometimes ask this question then, Tom, and let's ask this question of you now. Let's say I can guarantee you a recession in 12 months. What do you do differently today?
Take a slower path with the